program. If it's state contingent, what is it tied to? The similar story around interest rates or something different?
Right. So I think they've been, deliberately vague in that front, but they have clearly linked QE and asset purchases now to the economy and to their dual mandate. So, for interest rates, at least they've told us that they're not going to hike until we get to maximum employment and an overshoot. I don't think they go as explicit with asset purchases, but to actually say we're looking at the employment situation plus inflation is going to tell us, well, the economy, and I think this is something Chair Powell and other Fed officials have talked about, the longer term scarring risk. Do we reopen once we are all vaccinated to a new world? And does that new world look weaker in the labor market or inflation? And if it does, asset purchases is a tool to keep conditions accommodative. I think that came out very clearly from the minutes, very different from what they were saying before, which was they were shifting the narrative, but not really linking it to the dual mandate. Well, I think they're going to make a very explicit link to the dual mandate. It allows the hawks to come on board as well. If the economy needs more help, asset purchases is a very clear tool for them.
And Priya, the front end's anchored. So we've got a central bank now in the Fed, in your mind, and many other people share this view, telling us that they don't want a steeper curve. At the ECB, Philip Lane, the chief economist, has basically said the same thing. He said it's essential not to let the yield curve steepen prematurely, whatever that means. So we've got central banks on both sides of the Atlantic, Priya, saying we don't want steeper curves. Are you with them?
I think for now, we don't like a steeper curve because essentially a steeper curve at this point is short duration. So the only way the curve can steepen significantly here is if the 10-year goes above 1%, which I think you're really fighting the Fed on that. Once we get, let's assume the vaccinations by the second half of next year, it's progressing, the economy is recovering. At that point, it's going to depend on, as supply picks up, how much is the Fed willing and other central banks willing to offset that supply? So do we get a steeper curve in the hiking cycle? Yes, but we're very far from the hiking cycle. So right now, I would say the curve is basically your level of the 10-year, and we're long. I think when you start getting close to 1%, it makes sense to own. I think we're range trading even the 10-year for now. It's only when central banks and the Fed suggest that they're okay with higher long-end rates I think that's the time for the steepener. I don't think the hiking cycle this time will be a flatter curve. It's actually going to be a steeper curve. Let the long end normalize.
Okay.
Economy handle it, and then the front end will reprice.
And Priya, just quickly, you'd be a buyer all the way up to 1%. Got that. You're long the 10-year. Down to what kind of levels? What are you looking for here?
Well, I think a lot depends on the data. We've got a pretty weak, we've effectively got a double dip priced in. So I can see us go all the way to 50, 60 basis points on the 10-year. If somehow we get a big fiscal package, I think 70 basis points to 1%, that's the, so it's a tight range, but you've got the Fed that's really offsetting much of that supply.
Priya, thank you. Thank you so much. Priya Misra there of TD. Priya, fantastic to catch up. A happy Thanksgiving to you and to yours as well. I asked the question at the top of the hour, what does this market look like if we get a sub-50 PMI in the next couple of months? I think Priya gave you an idea of what she thinks it looks like in the bond market. That's the story for the months and maybe the year ahead. Let's get a sector price action of this morning. It's Danny Berger.
Don, I'm not sure if you're tired of trying to figure out if this rotation has legs, but it seems like the market is certainly tired of it. Taking a pause today, that big bid to value we've seen, in fact, growth momentum, that's what's outperforming today. You can see that in the sectors. Technology is what's up there, healthcare, materials, not as much as a little bit more of the value play, but still it really is a kind of a pause on that rotational play. Real estate, utilities, look, it's the bond proxies that are really taking a hit today. Keep in mind, on Monday, we're likely to see some of that rebalancing trade happen. Surely a lot of investors are going to have to go out of equities into bonds, given the recent outperformance of equities, perhaps some of those bond proxies falling out of favor. Now, I want to remind you of what the past week looks like, because it doesn't look like what it looked like today. Tech is the one that's outperforming. What's overperforming, what's outperforming, it's energy, it's financials, it's those value-heavy sector. Now, I'm going to ask it again. Does it have legs? Well, we've seen value start to catch up to what tech did earlier this year. It's still not there. So that trade certainly could continue despite the pause today, John.
That is the perennial question at the moment. Danny Berger, thank you. Coming up on this program, the market-moving events you need to be watching. Up next in our Trading Diary. In the markets right now, we advance about 1/3 on the Russell, about 1/4 on the S&P, and the outperformance on Big Tech with a record high in sight. That's the market. Here's your day and week ahead, what you need to be watching through the week. We'll get another round on the US consumer and the holiday shopping season with Cyber Monday. OPEC and its allies meeting virtually at the beginning of the week. Treasury Secretary Mnuchin and Fed Chair Jay Powell testifying on Capitol Hill on Tuesday. Plus we get US auto sales. And finally on Friday, it's the main event already. Payrolls Friday just around the corner. From London and New York, that does it for us. For our audience worldwide, this was the countdown to the open. This is Bloomberg TV.
This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney.
The Fed action, essentially unlimited quantitative easing.
Companies taking aim at coronavirus vaccines and other treatments.
This could be a lower for longer hit.
Market sell-off glowing global once again.
Breaking market news and insight from Bloomberg experts.
It's possible that this is going to be a scarring recession.
The Fed is really showing that they're doing whatever it takes.
A lot of people don't expect that the economy will reopen in full.
This is really hitting industrial America, and it's a major crisis.
This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney on Bloomberg Radio.
Well, on this Black Friday low volume trading day, the Nasdaq is up 0.9% now on semiconductors. We are seeing green on the screen. The UK moving to get the Astra COVID vaccine approved before the EU. We're also hearing that Astra is looking at doing more trials to try and instill confidence in its vaccine. All of that to come with Tim Annett, a Bloomberg US healthcare reporter, and Ned Phelps will join us, the Nobel laureate and the Center of Capitalism and Society at Columbia University Director, to talk Joe Biden's economic policies. We'll get all of his economic nominees next week. Let's get now Bloomberg Business Flash from Greg Jarrett.
Let me put down this drumstick, Bonnie, so I can tell you that stocks, though off earlier highs, are still up near record territory and thin post-holiday trading as investors assess valuations with pandemic still raging in parts of Europe and the U.S. Oil is down amid rising tensions among OPEC Plus members. Vincent Chagnot, General Insurance Asset Management Head of Research, tells Bloomberg the future looks rosy because of a vaccine.
So yes, I do believe that the vaccine is a game changer, and that's why, by the way, we have this quite remarkable market development over November, where the value stocks, the cyclical stocks, are catching up. They have plenty of room to the upside. You know, the MSCI Europe value is up 21% this month.
We check the markets now, as we do every 15 minutes. The S&P is up 0.3%, up 11. The Dow's up 0.2%, up 57. And the Nasdaq's up 0.8%, up 103. How about the 10-year? It's up 9/30 seconds with a yield of 0.85%. West Texas Intermediate crude oil is down 1.2% at 45.18 a barrel. COMEX gold is down 1.5% at 17.8370 an ounce. The dollar yen, 104.07. The euro's $1.1943, and the British pound, $33.42. How about Bitcoin? That particular exchange and most of its major peers have edged lower in the wake of some of the biggest declines since the onset of the pandemic. Bitcoin is down 1.9% at $16,726. That's a Bloomberg Business Flash. Bloomberg Markets is underway. Bonnie Quinn and Paul Sweeney.
Greg Jarrett, thank you so much. We appreciate that. Market Drivers is brought to you by New Jersey Institute of Technology. NJIT makes research breakthroughs and is ranked one of the nation's most research-intensive universities by Carnegie Classification. More at njit.edu/R1. Let's get an update on where we are in this first half hour or so of cash trading in the markets. We can do that with Bloomberg cross-asset reporter Kriti Gupta. Kriti, what are you looking at this morning?
Well, of course, we are seeing very low volume. That has to be the story of the day, really moving a lot of major averages by a margin that's fairly significant, given that we have such low volume, fewer traders on the trading desk. It's also sending volatility to an extreme low. So you did see the VIX drop below that $20 handle earlier today in the session. So very important metric, just given that we haven't reached that level since before that pandemic hit back over in March. So very important levels here, but you're also seeing gold take a hit, Bitcoin take a hit as well. So very interesting moves even on a quiet day.
And we're also seeing some individual stocks do extraordinarily well. Palantir, for example, up 15%. Etsy, the top performer in the S&P 500, and also the semiconductors, Kriti.
They really are, and I want to just hop on the semiconductors point that you just made. It's great to see that the stocks index up 1.5% on the day, and this really has to do a lot with that tech-adjacent trade. You are seeing those defensive sectors take the lead in today's trading session. No surprise there. We've had a big kind of cyclicals rally, so to see, especially ahead of the holidays, some traders really just sticking to that defensive bid. No, like I said, no surprise there. But then, of course, when you see a rally by such momentum, by such of a margin, you do have to end up seeing a little bit of a pullback. And it kind of seems like that's where we are, especially with the Dow just shy of that 30,000 level. And I'd argue you have that same dynamic with Bitcoin as well.
So, Kriti, as you talk to fund managers and traders, what are you hearing as it relates to the rotation trade, the rotation out of some of the high-growth tech names, whether it's an Amazon or an Apple, into some of the more cyclical names that are, betting on an economic rebound on the other side of this pandemic?
Well, it's going to be a little bit of a tug of war. That's what I'm hearing from most people on the street. This idea that every kind of 2 steps forward you take with cyclicals, you're going to take 1 step back favoring tech. And that's just going to be the case until you really see that economic data reflect the optimism that you're seeing in the equity market and arguably other risk assets as well. But even in that, some of the triggers that they're really watching is going to be that economic data that they're waiting to find out. So, of course, we did have a pretty big week pre-Thanksgiving, this idea simply that personal income had taken a hit. You saw jobless claims hit a 5-week high. So the question is, are we starting to go into kind of that double dip in the economic data? And does that mean a lower starting point for that economic recovery that we're really all looking forward to in 2021.
One of the major questions. Curious as to how much of an impact a better than forecast retail, group of data will impact this market. I mean, retail is a pretty small part of the market at this point, and yet we're all eyes on the U.S. consumer.
It is a small part of the market, but at the end of the day, we are a consumer-driven economy. So even though we have the economic data showing manufacturing, for example, doing actually fairly well compared to spending, the American economy is a consumption economy, and that, of course, trickles out into the rest of the world, affects other economies as well. So especially we're talking about this on Black Friday. This is such an important test, given that a lot of the sales in this holiday season and today in particular are going to happen over e-commerce websites and through, of course, online, just in terms of safety. And that's actually going to be a big test to see, does that hold up the same momentum you've seen on previous Black Fridays and previous holiday seasons? And if it does that signal a little bit of a pullback in the consumer spending, or are you seeing people really go all out for the holidays? And that'll give you a good indication of where consumer confidence is just beyond the data.
Yeah, it kind of calls into question, Kriti, a topic that we're not hearing as much as we did maybe several weeks ago, and that's fiscal stimulus. I'm even hearing some people and reading a little bit about maybe we don't need fiscal stimulus, or if we do, it could be a skinny package. What are you hearing from, again, fund managers and traders that you speak with?
Well, those are one of the arguments for having a skinny package in the first place, this idea that the recovery is coming along regardless. The question is just how much time will it take? And especially when we're talking about the kind of that retail spending, if we do get good data out of it, that could be used as kind of a defense for not having this comprehensive spending package. But then on the other hand, you do have a good chunk of the economy, a good chunk of American citizens that are still not able to spend and not even able to borrow. So kind of those low borrowing costs not really working in their favor. And a lot of them are losing jobs, just not in terms of the pandemic hit, but in terms of structural change. So that kind of retraining and finding new jobs to match the kind of changes in the underlying economy, that process takes time. And that's why a stimulus bill is so important. It's about getting the economic recovery back on its feet and accelerating it as fast as possible. But you're absolutely right. The idea of a skinny bill could very well get some more footing if you see the economic data actually recover.
Some of the regionals and the oil companies as well, some of the worst performers in the S&P this morning. Oil giving back a little bit of last week's gains. Still about $45 a barrel, though.
It is, and oil, I love to talk about oil because it is that global barometer, and it's kind of fading as a global barometer because economic activity is still churning, even though we're not all hopping in our cars or taking trips to wherever. But of course, seeing a $45 handle on WTI futures is a great sign for a third straight day in a row, simply because it means that they could potentially be breaking out of its trading range and keeping up that momentum, something we haven't seen in the previous cyclical rallies that we've had this year. But the idea here also is that a lot of this depends on OPEC supply and OPEC demand. You do have last-minute talks showing up with OPEC coming up this weekend, talking about their output production. And I just want to go global here for a second. This has a lot to do with simply the economies of other Middle Eastern countries as well. So very important gauge to watch.
Yep. Hey, Kriti, thanks so much for joining us, sharing your insight with us. We appreciate that. Kriti Gupta, Bloomberg cross-asset reporter, giving us the latest on the markets here in this morning trading. Right now, let's head down to Washington, D.C., world and national headlines. We do that with Nathan Hager. Nathan.
Well, Paul, with the pandemic still on, many retail watchers were thinking this Black Friday was going to be more like Blasé Friday, and it's kind of fitting up to the billing right now, though there are some pre-dawn campers like this woman outside a GameStop near Philadelphia trying to get that PS5.
It's hard to get it online. By the time you get on it, it's gone.
Well, shoppers who do show up for Black Friday will find a much different experience than years past. Walmart is limiting capacity to 20%, and Target's letting shoppers reserve their spot in line and get a text when it's time to go in. This as the coronavirus continues to surge. It remains to be seen whether Thanksgiving is going to make the pandemic even worse. Dr. Celine Gounder is an infectious disease expert who sits on President-elect Biden's COVID advisory board.
We can fully anticipate that we are going to see cases rising on top of this current surge in the next couple weeks.
Gounder tells CBS This Morning she's concerned intensive care units could run out of space heading into Christmas and New Year's. A top Iranian nuclear scientist and a number of security guards have been killed in what state media are describing as a shootout in eastern Tehran. Mohsen Fakhrizadeh was named by the United Nations in 2007 as being involved in Iran's nuclear or ballistic missile activities. The attack may be a repeat of past assassinations that Iran has blamed on Israel and U.S. intelligence, though the office of Israeli Prime Minister Benjamin Netanyahu isn't commenting. Acting Defense Secretary Christopher Miller made an unannounced visit to Somalia, the first trip of its kind by an American defense secretary. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The S&P is adding a bit to its 11% November rally. Trading's 23% below the 30-day average at this time of day. Stock market closes at 1 p.m. Wall Street time, while bond trading ends an hour later. Treasuries have advanced, and the dollar's headed for a second weekly decline. Let's take a look at where the numbers stand now. The S&P's up 0.3%, up 12. The Dow's up 0.2%, up 60, and the Nasdaq's up nearly 1%, up 116. The 10-year is up 9/30 seconds. The yield 0.85%. West Texas Intermediate crude oil's down 1.1% at 45.21 a barrel, with COMEX gold down 1.6% at 17.8290 an ounce. The dollar yen 104.06. The euro's $1.1940, and the British pound $1.3345. Sources are telling us that Airbus is confident in its plan to raise production of its best-selling A320 family of jets to a rate of 47 a month next year, despite a pause in the travel rebound that's increased the stress on airline customers. The company has extensively stress-tested its backlog of orders for the model, say the sources, and remains comfortable with the ramp-up. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Vonnie Quinn and Paul Sweeney on Bloomberg Radio.
It is time to take a closer look at the market now. Just a few weeks left in the year 2020. Let's bring in Lyle Heimball, Granite Group Advisors. Lyle, this market isn't cheap. Are you still a buyer at these levels?
Vonnie, thanks for having me, and and I want to be first to say Merry Christmas to everyone, because we're forward-thinking just like the markets. The markets, I think the markets are pretty fully valued. We've had a lot of different types of events that have really been positive. We're trading at around almost 22 times next year's earnings and 19 times 2022 earnings. That doesn't make it cheap when the average is around 17, but I think that if for investors that are a little bit longer nature, you want to stay along this market, because we do believe the market will be slightly higher next year.
Lyle, what do you actually want to be long in this market? A lot of folks over the last several months have really been kind of weighing the balance of those growth stocks that have done so well for so long, really since the financial crisis, if you will, against those, maybe some more cyclical names for those investors that are able to look to the other side of this pandemic and see some economic expansion here. How do you think about that rotation play?
Well, we wrote a note to our clients back on October 30th, and we said to them, people are human beings, right? So what does the economy look like when there's a vaccine, and what are people going to do, and how's that going to affect the economy, and how's that going to affect the stock market? And basically, we're social creatures. We want to go out and do things. That means that as the vaccine comes along, that people are going to go in the cars. They're going to use more gas. They're going to travel. That means the airline stocks are going to go up. That means people are just going to be out and about. So I think the things that you want to be long have really moved quite substantially. When you see stocks like Chevron up 35-40%, and Disney up 20 or 25% here in the last few weeks, it's been a great market for those catch-up stocks. Going forward here, because the valuations are full. They're not overly expensive, but they're not cheap. And I think what people really want to be long now, because of the real big tech push, is really stay focused on what the markets will look like in a year from now. I think we could have some sort of pullback here short term. Unemployment's coming up, COVID's coming up, but no one's really focused on that. But I would stay along, really start focusing on the mid-cap value, mid-cap growth names that are out there, especially for people that go into mutual funds. I think that's going to be one of the better plays out there going forward.
So, Lyle, how concerned are you by these near-term metrics here about the pandemic that are just worsening and worsening by the day? Are you trying to suggest to your clients that, okay, we know it's bad, but you really need to look to the other side of this, that there are vaccines coming, and don't let the near-term noise kind of keep you out of the markets?
That's a great question. The markets predict 6 to 9 months out. right? And with all the COVID news out there, 181,000 new cases, through yesterday, and you see what's happening. The market is completely discounting, the increase in COVID cases because of the vaccines. We have 3 vaccines that are announced. We'll see how the distribution happens, but we have to look past that because we have to look how the markets look, right? So if the markets predict 6 to 9 months out, we have to position portfolios 6 to 9 months out. What do we see going forward? And that's why I look at, when we at Grant Group, we look at, what is going to be the best positions to be catch up. Because if you look today, the growth stocks are up 30% on the year, and the value stocks are basically flat. So I think as we go forward, you really want to take advantage of some of those value plays that could still be potentially undervalued, but just wait for a little bit of a pullback here.
Lyle, I'm curious about the explosion of SPACs. Have any of your clients called you and asked you about them and whether they should be getting involved?
SPACs is we're not participating too much. We do invest a lot in private equity, and we do have a company going that's going to be going hopefully public through a SPAC, and it's going to be a huge hit for a lot of our clients.
Give us the skinny.
Well, it's a company called, it's announced, it's a company called Luminar, and great company, but we were private equity investors. I think people should look to, instead of making the quick trade, you should, align yourselves with firms and people that have a long-term view because, private equity is a very risky asset class, but, you really, you have to have patience and you have to be willing to lose money to make a little money. So, I'd be careful with SPACs. It's like everything else on Wall Street. Once it gets too hot, it probably is.
Lau, just real quickly, 20 seconds. Are you concerned about too many retail investors getting into the market? I think about the Robinhood and all these day traders.
Yeah, I think the Robinhood and all that, I mean, it creates a lot of volatility. And I think what people, I think, the volatility is really providing a lot of background noise. We always tell people to focus on the Fed and what the Fed does and not a president or a presidential election or anything else like that. And don't look at all the trials and tribulations. A lot of things get, as Wall Street works, everything gets overbought and oversold. And you just got to be careful what you're doing.
Lyle, thank you for joining us today. A fascinating conversation there with Lyle Heimbaugh, Granite Group Advisors, joining us from Washington, D.C. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we're going to take a look at AstraZeneca. The company is eyeing extra global vaccine trial as questions mount. Plus, we're going to chat with Barry Ritholtz from Bloomberg Opinion, get his thoughts on the markets as we head into the final month of 2020. But first, let's go to Greg Jarrett, Bloomberg News. We got a Bloomberg Business Flash. Greg.
Stocks continue to edge a bit higher in thin trading, Paul, this amid low trading activity due to the Thanksgiving holiday. Drew Mattis, MetLife Investment Management, tells Bloomberg he sees inflation in your future.
The period we're living in, more closely resembles kind of the Vietnam era in the United States, that 70s era that led to inflation picking up. You have a Fed that's very aggressive. You have government stimulus, which we already had rounds of, and we'll probably have more rounds of. And then, of course, you have a big amount of dislocation in things like the labor market. And so, you combine those factors, and people are beginning to worry a little bit more about inflation than they used to.
Let's take a look at the markets. The S&P's up 0.4%, up 14. The Dow's up 0.2%, up 60. And the Nasdaq's up 1.1%, up 138. The 10-year is up 9/30 seconds with a yield of 0.85%. West Texas Intermediate crude's down 1% at 45.26 a barrel. COMEX gold's up down 1.4% at 17.8530 an ounce. The dollar yen 103.98. The euro $1.1948. And the British pound $1.3357. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Vonnie Quinn and Paul Sweeney on Bloomberg Radio.
Bloomberg Markets is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions that they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. AstraZeneca, the third big pharma player to bring a potential vaccine to the market. But there's some questions around some of the disclosure of its initial trial to help us get up to date on where we are with that AstraZeneca vaccine. We welcome Tim Annett, Bloomberg U.S. Healthcare Editor. Tim, thanks so much for joining us here. Just help us frame what the issues are surrounding what was that initial disclosure by AstraZeneca about its upcoming vaccine candidate.
Sure. So the company had initially published a release with two different efficacy rates in it for two different dosing regimens, and one in which patients were given a half of a dose and then a second dose, full dose as a booster, appeared to be more effective. The questions arose out of why a lesser dose of the drug appeared to be more effective and how they arrived at the decision to administer the dose that way. And what has emerged is that there was a manufacturing discrepancy which led them to do the smaller dose. And so now the question is, given this sort of gap in our understanding, do we have to do a more comprehensive look at the science? And so the company is now saying that they're going to do another global trial to try to bear out the efficacy results they saw in this smaller dose. Is
this really an effort at appeasing the public? Because it seemed like, AstraZeneca was doing a victory lap and the rate of effectiveness was above 70%, which is generally considered excellent for a vaccine. But because we had seen 90 and 94% from previous vaccines, it felt like everyone was scratching their heads as to why AstraZeneca was doing this victory lap.
Yeah, and I think that the head scratching really came in the fact that you had these sort of two different regimens, and the one with two full doses was 62% effective, and the one with the half dose and the full dose was more than 90% effective. And so that 70% figure that we've heard was sort of a blend of those numbers, or an average, which I think that you could take issue with the averaging of those, given that they were different regimens and everything. So, the initial readout seemed good, but then the more that people looked at it, the more questions arose.
So is there a sense here that there's a real science issue here, Tim, or is it more of a communications issue?
Well, I think there's both, right? There has been communications issues. Like I said, they sort of put this 70% number out there, which was called into question, and then there was a sort of a trickling of information about what had actually happened in that 90% side of the trial. We saw Moncef Slaoui, the person who runs Operation Warp Speed in the U.S., kind of dribble out a few little pieces of information about the trial himself that then the company then had to answer for, and then we had the CEO yesterday saying, oh well, we're taking a look at this and maybe we have to do another trial. So the communication around it has kind of come in these fits and starts, right? But the science, it is really unusual for clinical trials to be run in this way, and so this new trial is going to have to answer some of those scientific questions, and then we're going to have to see how the company does in communicating about it after we get some data from this new trial.
Tim, will the public have a choice on which vaccine they get, or will they be able to ask for a particular one? It feels like most people would want, well, the Pfizer one right now, just because of those data points.
Yeah, sure. So I think this is going to be very contingent upon how these things are distributed once they are authorized. I don't think that every place that you could go to get a vaccine will have every option available, but how that works remains to be seen. Some of it's going to be dependent on timing, of course, and some of it will depend on where a person is sort of in the hierarchy of, are you a healthcare worker? Are you an essential worker? Or are you just, sort of a regular citizen trying to get a shot? So there are a lot of different factors that are going to play into which shot you get, where you can get it, and when.
Hey, Tim, the company is saying that these additional tests should not delay regulatory approvals. Does that seem reasonable?
Well, what they're saying is they will not delay things in the UK or the EU, where they've had sort of a rolling review with the regulator. And it sounds as though, there has been more information flowing to the regulator during the trial. In the U.S., the FDA does not do reviews in that way. They'll look at everything once they have a full suite of trial data, and then it'll go through the FDA process. So I think that, what happens in the UK or in the EU could look much different from what happens in the U.S.
Very good. Hey, Tim, thanks so much for joining us, helping us bring us up to date on what's going on with AstraZeneca. Tim Annett, Bloomberg U.S. healthcare reporter. Again, AstraZeneca looks like it's going to go out there and do some further testing on its vaccine candidate. There's been some confusion as to some of the initial test results, so warranting an additional test. Right now, let's head down to Washington, D.C. We'll go to our 99.1 studios. Nathan Hager, World and National News. Nathan.
Yeah, Paul, an update on an international breaking news story that just crossed the Bloomberg terminal. Iran is blaming Israel for the assassination of its top nuclear scientist. Foreign Minister Javad Zarif says there are serious indications of an Israeli role in the killing of Mohsen Fakhrizadeh. State media say he was killed in a shootout along with several security guards today in eastern Tehran. The UN in 2007 named Fakhrizadeh as being involved in Iran's nuclear or ballistic missile activities. Iran has long maintained its nuclear program is peaceful. The coronavirus has made this Black Friday one to remember for reasons no one would have thought last year. Crowds are light, doorbuster deals are online. Poonam Goyal with Bloomberg Intelligence says most retailers want shoppers to do their thing online this year.
They've really scattered their discounts to be more than just one day, encouraging people really to shop more online given the social distancing mandates. And the latest data show that may be working. Adobe Analytics says Thanksgiving Day online spending came in at about $5.1 billion. That was nearly $1 billion lower than predicted, though still a record. President Trump says he will leave the White House on January 20th if the Electoral College finalizes Joe Biden's win. But the president is insisting the election is not over yet as he continues to make unfounded claims of fraud.
And I just want to tell my people, don't be disappointed yet because this race is far from over. But I'm going on Saturday night I'll be in Georgia. We're going to have a tremendous crowd. They're looking for the right site.
Today, the president's scheduled to travel to Camp David. Global news on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks edge back into record territory and thin post-holiday trading as investors assess valuations with the pandemic still raging in parts of Europe and the U.S. Oil is retreating amid the rising tensions among OPEC Plus members. We take a look at the markets every 15 minutes. The S&P is now up 0.4%, up 13. The Dow's up 0.2%, up 65. And the NASDAQ's up over 1%, up 127. The 10-year is up 8/32, the yield 0.85%. West Texas Intermediate crude's down 1% at 45.26 a barrel. COMEX gold's down 1.4% at 17.8630 an ounce. The dollar yen 104.01. $1.1947, and the British pound $1.3358. With sparse crowds and another stampede of holidays past, some retail watchers have started to refer to Black Friday as Blasé Friday instead. And that's even before the virus hit. The sluggish in-person traffic reported in 2019 is only expected to thin out even further this year as mall-weary shoppers trade in their midnight doorbusters for digital deals. That's a Bloomberg Business Flash. I'm Greg Jerry.
This is Bloomberg Markets with Paul Sweeney and Vonnie Quinn on Bloomberg Radio.
And this portion of Bloomberg Markets is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Now it's time to bring in Masters in Business host and, of course, founder of Rittles Wealth Management, Barry Rittles, for our weekly check-in. So, Barry, thanks for joining us this Black Friday. I hope you had a lovely Thanksgiving, lovely and safe. What are the challenges to this market between now and the end of this year?
Wow, that's a broad question.
Not necessarily. I could outline a few if you want.
Well, as we saw over the past couple of days in Bitcoin, when markets have a tendency to get ahead of themselves, there is also often a short, sharp correction, sometimes double digits, and I don't know if we're seeing that in equities the way we saw that in Bitcoin. The difference being Bitcoin is so speculative and equities are really a bet on, the future innovation of the U.S. economy and human ingenuity. We had the president come out and take one of the biggest risks off the table, which is how far he was willing to go to overturn the results of the U.S. election. And it seems that he has now, if not conceded, certainly acquiesced that he lost and that he'll be leaving January 20th. And so that was one bit of potential uncertainty that was removed. Nobody seems to care a lot about economic data or earnings because this is such an aberrational period. So during the transition, the thing I would be looking out for would be military options, whether it involves Iran. The headline just crossed a little while ago about their top nuclear scientist. I don't know what else the White House has planned as they exit, but that's potentially a source of uncertainty and volatility. That's one thing to be worried about.
Barry, what do you think the market is discounting as it relates to vaccines and the rollout of the vaccines and who gets it first? And do you think the market's saying, boy, if we don't get a mass inoculation or at least a broad inoculation by mid-year, that would be a disappointment?
Oh, no, I think that's kind of what the market is discounting and is already priced in. If you look at Pfizer, for example, December, January, February, they're talking about 20 million, 30 million, 35 million doses per month over those 3-month periods. So all the epidemiologists, and you look at what Dr. Fauci has said publicly, there's a methodology for how this gets rolled out. It'll go out to healthcare workers and doctors and EMT and ER people. They're the frontline healthcare workers are going to get it first. And then other first responders, police, EMTs, fire are going to get it. And it will slowly work its way into the broader society. The older, more comorbidity, most at-risk people are the next thing. I'm in my 50s with no, at least as far as I know, comorbidities. So I'm probably towards the back of that list. And if you're younger, you're going to be even further to the back of that list. But I think the market has a pretty decent understanding of how these are going to get distributed, how they're going to be rolled out. Even the mistake, I think people are misunderstanding the mistake with the AstraZeneca test. Hey, it was better than expected because they gave half doses. And that's a very easy to transport, very inexpensive, at least compared to the mRNA vaccines like from Pfizer and Moderna. That's going to be broadly distributed around the world. And so the market is saying, hey, we're going to get back to something at least resembling normal at some point in 2021. I suspect it happens much faster than a lot of people are realizing. There is a ton of pent-up demand out there.
What about pent-up demand in this market, Barry? Is a Joe Biden presidency, a Kamala Harris vice presidency, and a Georgia that goes 1-1 or stays Republican, is that just positive across the board?
That we can't get the economy back to normal until we get the virus under control, and we could do it slowly and inexpensively, or more quickly and inexpensively, and perhaps those two seats will determine which path we take. If the Democrats regain control of the Senate, I think what you're going to see happen is a 10-day lockdown, a mask mandate, and a pretty substantial stimulus, including extension of unemployment, extension of the moratorium on evictions, and maybe another $1,000 or $2,000 check to everybody. As much as we don't love those sort of broad social programs, this is an emergency, and during emergencies, we do things that we don't normally do. In fact, I was just shopping for some groceries. I still can't get Clorox sanitizing wipes. It's still hard to find a number of. Good luck getting Purell. And I think you would.
So you were in the alcohol section, is what you're saying?
Yeah, I think you'd see the Defense Authorization Act passed, and the direction given to a handful of companies: give us 100 million masks, give us all the Purell and all of the sanitizing wipes that we need, and that will move the process along of reducing infections and getting us back to normal more quickly. Without control of Congress, that becomes a negotiation, and I have no confidence that Mitch McConnell is anything other than a political animal. He's been country second since the financial crisis, so I'm not holding my breath that he cares a whit about the genuine problems we see. We see these massive food lines at food banks. That seems to have been lost on Congress, and I continue to be shocked by it.
So, Barry, just real quick, 30 seconds. What's some of the themes you're thinking about for 2021 as I'm sure you're going to be communicating with your clients?
Well, you saw what happened with oil and coal over the past 4 years. Despite having a champion in the White House, they have gone down. ExxonMobil is talking about they expect even lower oil prices. And the Biden administration is going to do a number of things to accelerate the electrification of the American automobile industry. That's going to be one of the biggest themes that we're going to see, regardless of what happens in Georgia. It's not just going to be Tesla. It's going to be across the board, and that's going to have a big impact on both the economy and consumer behavior.
Hey, Barry, thanks so much for joining us. We appreciate you jumping on here the day after Thanksgiving. Barry Ritholtz, founder of Ritholtz Wealth Management. He's also a Bloomberg opinion columnist, and he's host of Masters in Business on Bloomberg Radio, a great podcast. We suggest you check that out here. So again, investors parsing the data as we enter into the final month of 2020 and get ready for what hopefully is a better 2021.
You're listening to Bloomberg Markets with Paul Sweeney and Carol Messer
on the White House, what is going on with President Trump and the transition. Plus, we will get the latest on markets. And we're also going to take a look at the municipal bond market coming up, how it is reacting to fiscal stimulus or the lack of fiscal stimulus. But first, let's go to Greg Jarrett for a Bloomberg Business Flash. Greg, what do you have for us?
We're still in the green, Paul. Not as far in the green as we were a bit earlier, but the S&P has added to its 11% November rally. Trading's 23% below the 30-day average at this time of day. The stock market closes at 1 p.m. Wall Street time, while bond trading ends an hour later. Treasuries have advanced. The dollar's headed for a second weekly decline. Let's take a look at where the numbers stand right now. The S&P is up 0.4%, up 13. The Dow is up 0.2%, up 55. And the NASDAQ is up 1.1%, up 133. The 10-year is up 8/30 seconds. The yield 0.85%. West Texas Intermediate crude oil is down 0.7% at 45.39 a barrel, with COMEX gold down 1.5% at 17.8540 an ounce. The dollar yen 103.99. The euro $1.1947. The British pound $1.3346. Joe Feldman, Senior Managing Director and Assistant Director of Research at Telsey Advisory Group, tells Bloomberg this holiday season is all about one thing: buying it online and having it delivered.
Yeah, I think people are still focused on the main areas of fitness, home office, and trying to find some joy and some things to make their living environment a little more fun and better experience.
That's a Bloomberg Business Flash. The special edition of Bloomberg Markets continues now with Carol Masser and Mr. Paul Sweeney.
Yeah, thank you so much. Really appreciate it, Greg. You are listening to Bloomberg Markets on this post-Thanksgiving Black Friday. So much going on, certainly in the world, Paul. Yep. We're going to talk Black Friday. We're also going to talk about investing in wine. We're going to wrap up with that, which is kind of nice and topical as we kick off the holiday season. You knew I was going to go there.
I knew you were going to get that in
at the top.
Exactly.
Speaking of leads, man, there is a lot going on when it comes to politics once again, and we are all talking about Iran's foreign minister saying that there are serious indications of an Israeli role in the assassination of a leading Iranian nuclear scientist. That is certainly one of the global stories that we are talking about when it comes to relations. So let's talk about that. Let's talk about what's going on with the president. On the trail with him, traveling with President Trump, is our own Bloomberg News White House correspondent, Josh Wingrove. And Josh, I believe you're in Virginia. Is that right?
That's right. Yeah, we've just dropped the president off at his golf course here. So it looks like a day of golf for him.
He's golfing? I hadn't heard that.
Yeah, he's a big golfer. He golfed yesterday as well. He's due to fly to Camp David later today, where it's indications he'll spend a bit of time there. So, Trump took questions from the press for the first time last night since the election, but we might not hear from him again for a few days other than Twitter.
So, Josh, let's talk about kind of where we are in the transition here. It appears that the Trump administration has given the green light to Biden and the campaign to kind of get up to speed here. What do we expect from the president as it relates to a potential concession, or are we just moving past that at this point?
Well, I mean, what he indicated yesterday is that he would leave the building, like leave the White House, but he might never actually formally concede. And he might not attend the inauguration. He said he knew the answer about whether he would attend the inauguration, but he hasn't actually said whether he would. So, he did offer some indications yesterday that the election outcome is beginning to set in. He said, for instance, don't let Joe Biden take credit for the vaccine. That's sort of an indication that he does, in fact, expect Biden to take over. And we pressed him, like, look, are you saying that if the Electoral College confirms Biden's win, that you're going to reject that? Will you leave this building? And he said, of course I will. Of course I will. But then he sort of launched into his sort of series of fairly conspiratorial allegations of fraud in the election. They simply have not produced evidence at all about fraud going on. So, he looks basically planning to sow doubt in the election result, make all his supporters think it was rigged, even though there is no evidence of that on any sort of grand scale, at least, and then go away. We also asked him last night, hey, what about 2024? And he said he didn't want to talk about that yet.
Yeah. Well, it's kind of fascinating, Josh. And I do wonder, since you're, traveling with the team, you're talking with the president's advisors. I mean, what's the strategy behind this? Is this just President Trump playing to his supporters at this point? Is there kind of maybe in an odd way a legal strategy so that when he does leave the White House, he's going to say, hey, I won. You guys can't pursue me on some of these legal matters. Like I do, that I'm protected. I wonder, what's the thinking here?
I don't think there's a legal strategy per se. And forgive me if my voice is a little muffled. I'm speaking to you through an N95 mask, as you can appreciate. It's the reality of these times.
Yes.
No, I don't think it's a legal strategy per se. I think it's a PR strategy. There's nothing Donald Trump hates more than a loser. He uses it as an insult all the time. And the notion that he will ever admit that he personally lost this election, I guess, seems far-fetched. We do not know right now who his top advisors really are. We think he is probably family. Rudy Giuliani, of course, has taken over the legal team. We have not heard from senior members of Trump's campaign, the people who've been running it and doing the press calls, in over 2 weeks. So it's not clear whether he's listening to them, what input they have. I think this is just a case of a guy wanting to sort of set his own narrative, who has been increasingly just sort of consuming right-wing media outlets and this and that. He's been waging a war recently on Fox News, which he doesn't think is right-wing enough. It's not clear to me whether he believes what he's saying, but he seems to. The problem is there just isn't the evidence to back it up, or at least if they have it, they haven't given it yet. Instead, his lawyers are stopping short in court, where you're, under penalty of perjury, of saying the things that Rudy Giuliani is saying on Twitter and in press conferences, where they don't face that kind of penalty, of course.
Josh, is there what's the thought as to how the president will perform over the next throughout until January 20th? Do you expect him to be active? Do you expect him to try to throw some roadblocks in the way of President-elect Biden, or perhaps maybe just take a lower profile, maybe stay down in Mar-a-Lago?
Yeah, I think it's door number two. All indications are that they'll try to clear the cupboards a little bit of stuff that they wanted to do, maybe some last-minute pushes on, subjects like other pardons, for instance, perhaps something on immigration, this sort of stuff. In other words, get stuff out the door that they were hoping to get out the door. But Trump, since the election, has maintained a very, very, very thin public schedule. He has had almost no events. As I say, until yesterday, he did not take questions from reporters at all. That's unusual. You normally would do that every day or two. And so, maybe that's the case, of what to expect. In other words, he's not looking like he's particularly interested in playing a public role as president. Maybe he's playing more of a private one right now. But he's sort of coming away from the limelight, which is unusual for President Trump, of course. And, as he's sort of fighting to insist that he won this election, they just continue to say that Biden has to prove that his votes are legal. It's like that's not how this works. I mean, the fact that they've been counted is the proof that they were considered legal by those states. And the onus is on people who have objections to raise proof that they weren't valid, that they shouldn't have been counted. And they just simply haven't done that yet.
Hey, listen, we only have about 30, 40 seconds here, Josh. This news out of Iran about their leading nuclear scientist and accusations. Are we expecting the president to maybe do something on this or make some statements that could be something that Joe Biden ultimately inherits when he gets into the White House come January? And just got about 35 seconds.
It's a great question. Right now, we have not heard formally from them. Trump retweeted something about it, but he hasn't really commented on it. He will, I'm sure, celebrate this. He, of course, wants to be very tough on Iran, or seen as tough on Iran. This is a big part of Joe Biden's policy. We simply do not know a lot about what Joe Biden will do. But for now, no U.S. comment and no U.S. indications. As you say, Iran seems to be blaming the Israelis.
Josh Wingrove, thank you so much. We appreciate your thoughts, as always, even through the mask. Josh Wingrove, White House correspondent for Bloomberg News, joining us on the phone from Northern Virginia, I believe. I don't think the press get to play golf, but they certainly get to follow the president there to his various golf clubs for the golfing. And it's interesting, Carol, that news coming out of Iran. It's going to be, I think, breaking news and building news throughout the remainder of the day. So we'll certainly stay on top of that. Right now, let's head down to Washington, D.C., our 99.1 studios. Nathan Hager for world and national news. Nathan.
Well, Paul, while we possibly wait for President Trump to comment on this other than on Twitter, we are hearing from the head of Iran's armed forces. Mohammad Bagheri says, quote, severe revenge awaits the terrorist groups and perpetrators behind the attack that killed a top Iranian nuclear scientist. Mohsen Fakhrizadeh and a number of security guards were killed in what Iranian state media are calling a gun battle in eastern Tehran today. Iran's foreign minister Mohammad Javad Zarif said on Twitter there are, quote, serious indications of Israeli role in what Iran is terming an assassination. Heading into the height of the holiday shopping season, consumer spending is holding up, thanks largely to Americans who have continued to work full-time from home. Bloomberg's Irv Chapman reports from Washington.
Spending patterns have shifted for those with money to spend, Steve Sadoff of MasterCard said in a Bloomberg interview.
They're not commuting. They're staying home. They're not traveling. They're not going out to eat in restaurants as much. So they're spending on things related to their home. And for the small retailers that aren't able to play at the scale and be able to do things like buy online, pick up in store, those retailers are really struggling.
Sadoff said touchless payment systems, more widely available in other countries, will spread rapidly in coming days in the United States. In Washington, Irv Chapman, Bloomberg Radio.
The coronavirus is no longer spreading exponentially in the UK. That's according to government scientists who say the country's R rate or rate of transmission has dipped below 1% for the first time since September 4th. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Investors are easing off the buying throttle. Stocks are up, but not as high as they were. Trading is thin as investors assess valuations with pandemic still raging in parts of Europe and the U.S. Oil is retreating amid rising tensions among OPEC Plus members. Let's take a look at where the markets are now. The S&P's up 0.3%, up 12. The Dow's up 0.1%, up 44. And the Nasdaq's up 1.1%, up 133. The 10-year is up 9/30 seconds. The yield is 0.85%. West Texas Intermediate crude's down 0.6%, at 45.43 a barrel, with COMEX gold down 1.25%. At 17.8890 an ounce. The dollar yen, 104.02. The euro, $1.1954. And the British pound, $1.3334. Credit Suisse is merging some of its Latin American wealth management regions in a restructuring that will shift resources and cut costs in a key growth area for the Swiss bank. The bank's Andean group of clients from Peru to the Caribbean will be split, with some countries reassigned to the Mexico and Central America region, the rest to a South American grouping, excluding Brazil. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Now on Bloomberg Markets, Munis in Focus with Joe Mysak.
All right. You are listening to Bloomberg Markets. Carol Massar along with Paul Sweeney. Focus on Munis, brought to you by Build America Mutual. When the market is volatile, BAM provides stability. BAM-insured municipal bonds deliver default protection, value preservation, and a durable rating. Ask your broker about BAM-insured municipal bonds. So we do want to talk about the municipal bond market as a whole. If I look at the Bloomberg Barclays Muni Bond Total Return Index, up about 4.5% this year. We're watching, though, our cities and towns so closely because those tax bases have been hit hard because of the virus. So the person who is tracking this nonstop for us here at Bloomberg is Joe Mysak. He is editor of Bloomberg Brief, Municipal Market at Bloomberg News, and he's with us on the phone. I think you're in New York, are you?
Yes, I am, Carol. I'm out in Brooklyn.
Okay. Well, nice to have you here. I feel like there's so much to talk about. Front and center, do you feel like, I don't know, the worst is over for towns and cities, but or we're not quite sure yet?
Well, you know, with munis, it's always a delayed reaction. So, so many of them are, you know, looking forward to how they're going to do in their next tax cycle. So that would be next April, next March. It really depends how they, you know, each state, you know, has their, collects their taxes and how they're doing. And, you know, so far this year, so many municipalities have actually done better than expected because the ones that have income taxes and things like that, you know, so many investors have done really well in the stock market. So they're, you know, paying taxes on their capital gains, etc. So, and, you know, the ones that have personal income taxes are also collecting more money. So that's a good thing. But down the line, there's so many of them are not collecting sales taxes, tourism taxes, fees, you know, toll roads, things like that, that they would be expecting otherwise. So, you know, it's always, with munis, it's always delayed by like a year or so. So everyone else may think, oh, wow, this is great. You know, we're going to get a couple of vaccines. Goldman Sachs thinks, you know, everyone's going to be vaccinated by June. Right. Isn't that great? But, you know, for municipalities, the pain lasts a little bit longer.
So, Joe, with President-elect Biden, or also known as Amtrak Joe, what does that mean for the long-awaited Gateway project for the Metro New York region? Is this going to get a green light, or does he still need to work with Congress on this?
Well, you know, wouldn't you I would think that it's going to get a green light. I mean, that project has been out there now for 4 years, and originally the federal government, the Obama administration, had okayed the federal government's contribution. I'm not sure that Congress would need to get involved with that. I think this is a pretty straightforward, would be a pretty straightforward operation of saying, oh yeah, this is, you know, strictly a matter of matching funds, and here's what you're putting up, and here's what we're putting up. That's pretty straightforward, and I would imagine that that's something we could look forward to, maybe in the first quarter. I mean, you know, certainly in Amtrak Joe's first 100 days, I would think, you know, a really worthy infrastructure project like that.
No, listen, and you think about infrastructure, Joe, generally speaking, I mean, this is the one thing, I'm amazed that we're still talking about this. This is one thing that has had bipartisan support, we thought makes sense. Ultimately, it creates jobs, it creates some momentum in the economy, and it just really tackles some projects that really need to be dealt with. But what's the momentum, what's the political momentum, do you think, come the new year for stuff like this?
You know, exactly as you say, Carol, there does seem to be bipartisan support for infrastructure. And, maybe this time around, it'll go through. And, infrastructure aid, not even being tied at all to a new CARES Act or new aid, but rather just, hey, here's what we're going to do because this is, what we can do just for infrastructure nationally. We're going to give this much extra or that much extra. I would not think that that's anything that's going to get thumbs down in Congress, especially because it's earmarked, for specific projects. It's not just, here's this big bunch of money.
So, Joe, talk to us about the flows into the municipal bond market. I know for the most of the year, very, very strong. Is that still the case here?
Oh, yeah. Investment Company Institute reported on Wednesday that I think we had another $2 billion this week. So, yeah, they've been, all the lights are green in the muni market so far. Maybe, toward the end of the year, maybe you'll see some nervousness. But so far, people are just interested in tax-free income and preservation of capital, and they're looking at munis and municipal bond mutual funds.
Yeah, it's kind of fascinating, some of the stuff that's going on. Hey, just quickly, Joe, I just kind of piggyback where Paul and I started about, impact on cities and towns, COVID. Working from home, is this going to be something that cities and towns just have to figure out how to adjust to, just quickly?
Oh, wow. Alex Tansey did a great piece earlier this week all about how in the country's major cities and towns, something like 50% of the labor force is working from home still.
Right.
So that is just, I thought that was just fabulous. What a nice piece that was. Yeah, it's something that they're going to have to figure out. I mean, there's some things that you just sit there and say, well, I don't think people are going to give up easily on e-commerce, and they're not going to give up easily on working from home.
I am all in on both, to be quite honest. All right, Joe Mysak, thank you so much. He's editor of Bloomberg Brief, Municipal Market at Bloomberg News, joining us on the phone in New York City. So listen, working from home, we're seeing a lot of it, Paul.
It's a thing. It's staying, it sounds like.
It's a thing. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Yes, indeed, Bloomberg Markets on this post-Thanksgiving Friday, Black Friday, in fact. Carol Masser along with Paul Sweeney. Coming up, we're going to go through some of the day's virus headlines. They are troubling, although we are seeing some signs of easing overseas. We're going to get into that with Lauren Sauer over at Johns Hopkins in just a moment. First up, though, a check on your top business headlines with Greg Jarrett in our 960 newsroom in San Francisco. Hey, Greg.
Stocks are modestly higher right now, Carol. Gains are proving enough to pull the NASDAQ and the S&P to or near record territory a day after the Thanksgiving holiday. Trading comes amid the persistent rise in COVID-19 cases despite progress on remedies. Let's go ahead and check the markets and see where we stand now. The S&P is up 0.3%, up 12. The Dow Jones Industrial Average is up 0.1%, up 43, and the NASDAQ is up 1.1%, up 130. The 10-year is up 9/32 with a yield of 0.85%. West Texas Intermediate crude oil is down 0.5%, at 45.46 a barrel. COMEX gold is down 1.2% at 17.8970 an ounce. The dollar yen 104.01, the euro $1.1956, and the British pound $1.3332. QuantumScape shares have surged during a shortened trading session today as investors cheer the arrival of yet another buzzy electric vehicle play. The developer of solid-state lithium metal batteries for EVs, founded in 2010 at Stanford University, is listed under the ticker QS after completing its merger with blank check company Kensington Capital Acquisitions. Shares ran up as much as 50% today. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Paul Sweeney and Carol Masser on Bloomberg Radio.
Bloomberg Markets is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Well, the metrics coming out globally continue to be very grim in terms of new cases and hospitalizations and unfortunately, fatalities. That is offset in some part by continued good news we're getting out of the vaccine front. Let's get all the latest. We can do that with Lauren Sauer, Johns Hopkins University, Associate Professor of Emergency Medicine. And we should note that the Bloomberg School of Public Health at Johns Hopkins is supported by Michael Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies, and this radio stations. Professor Sauer, thanks so much once again for joining us here. Give us kind of what you're in the healthcare community, how you guys are reacting to just here in the U.S., these pandemic numbers that are unfortunately setting records on a daily basis.
Yeah, we're just sort of waiting and watching to see what happens after the holidays, after Thanksgiving, and then with the impending winter holidays. You know, watching the cases pass 11 million across the U.S. and daily cases topping 200,000. It's scary to see, and I think what we're looking at is to not get too comfortable with the likely drop in the numbers from the lower testing rates and lower reporting rates over the holidays, and to get ready for that surge to come afterwards. So we're just sort of gearing up, ramping up, making sure everybody is ready to go and that we have plans in place for when the surge inevitably comes.
Well, Lauren, this is what it's about, right? This is what we've all been nervous about, is that, you know, we saw it with the Canadian Thanksgiving. The concern is we saw it during kind of the summer holidays, you know, and summer was different. It was warmer and maybe it was tempered a little bit. But the concern is here we are in colder weather, where holidays, people are gathering together. We're concerned about Thanksgiving being a super spreader event. We could see in a couple of weeks, maybe less, some really rough numbers that are going to strain, once again, our system and really put a lot of Americans once again at risk.
Yeah, absolutely. I mean, you know, when we saw those spring numbers and those surges, they were regional, right? So we did have areas that we could pull resources from, that we could support other areas that were more heavily affected. Across the U.S., we're seeing surges, and across the U.S., we're going to see a follow-on increase from these Thanksgiving holidays. I don't think travel dropped off nearly as much as we were hoping it would for the Thanksgiving holiday. You know, we heard reports of people having big dinners, having family gatherings, traveling across the U.S. in some circumstances. A lot of flying still happened. So I think we're all just sort of waiting to see what happens after that.
Can I just The flying pictures, I don't know about you, Paul. Like, my understanding is the numbers are half of what they were, but we still had millions of Americans flying this holiday season. Those numbers, those visuals that I saw on some of the news programs, Lauren, that kind of terrified me and upset me, especially considering how much we've learned and the impact COVID can have, especially in a closed environment.
Yeah, absolutely. I mean, we've seen a lot of great reports on how safe flying can be and how we're not seeing cases spread on planes, but there's so much that has to happen before and after that airplane environment that we're not really talking as much about. And then you have people going to new groups, mixing with new families or families they haven't seen in a while in new regions with different spread. And so, it's really, really concerning to see the volume still so high in travel, especially around this holiday, especially on the tails of an already pretty massive surge.
Lauren, what kind of shape do you think the American health system is now in terms of the hospitals in being able to handle this third wave, if you will? Again, here in New York, Carol and I remember Mount Sinai Hospital in Central Park setting up tents in Central Park. What's the status of the U.S. healthcare system right now in terms of hospital capacity?
I think it's already pretty taxed. I mean, we're seeing numbers that are, that look like those regional numbers, but all across the country. And we're seeing bed capacity just drop, basically. So meaning that patients are in beds. We don't have the capacity to take on new patients. And we see hospitals really planning for crisis standards of care. So adapting how they would care for a single patient based on, the needs of the broader community and the levels at which we're seeing patients. One of the biggest issues around the care is the people who provide that care, right? So before COVID, we had a healthcare worker shortage in the United States, and now it's even worse. And we're so much further down that road of fatigue and exhaustion and illness that those people who were already working so hard, who we've asked even harder, are coming into this next, surge, exhausted, overworked, possibly even sick. In some areas, we've seen these rules put in place where
January, February, that we're telling a much more optimistic story because of the vaccine, just quickly.
Yeah, I'm hopeful for the vaccine. I'm hopeful for some changes with the new administration. I'm hopeful for a lot of things. I think right now is the time for everyone to just get on board and to get this fixed.
Hey, Lauren, thank you so much once again for joining us. We always appreciate your perspective. Lauren Sauer, Associate Professor of Emergency Medicine at the Johns Hopkins School of Medicine, joining us on the phone from Baltimore, Maryland. We should note that the Bloomberg School of Public Health at Johns Hopkins is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies, and this radio operation.
So, Paul, get on board, wear a mask, right?
That's absolutely a mask. Everywhere I turn, I have a mask.
Me too.
Right now, let's head down to our 99.1 studios in Washington, D.C. We got world and national headlines with Nathan Hager. Nathan.
All right, Paul, thank you. The head of Iran's armed forces is vowing, quote, severe revenge for the terrorist groups and perpetrators behind the attack that killed his country's top nuclear scientist. Mohsen Fakhrizadeh and a number of security guards were killed in what Iranian state media are calling a shootout in eastern Tehran. On Twitter, Foreign Minister Mohammad Javad Zarif said there are, quote, serious indications of Israeli role, end quote, in the assassination. The United Nations has tied Fakhrizadeh in the past to Iran's nuclear and ballistic missile activities. This is a Black Friday like none other. Thanks to the pandemic, stores are reporting much lighter foot traffic than usual. For many, that's by design. Jill Renslow at the Mall of America in Minnesota says they're at half capacity and trying to ensure it's safe for shoppers who do show.
We have dedicated staff. They'll be wearing red shirts as you enter the building and ensuring that you have your mask on and are wearing it properly. And then you'll also see our staff throughout the mall ensuring that you keep it on.
Adobe Analytics says shoppers spent $5.1 billion online Thanksgiving Day. That is a record, but still $1 billion less than analysts had predicted. Public health experts, of course, pleaded with people to stay home and keep it to immediate family on this Thanksgiving. But the latest air travel numbers indicate many of us didn't listen. The Transportation Security Administration says more than 1 million people, 1.07 million, crossed through airport security on Thanksgiving Eve. That is the most since the pandemic. This year's travel numbers are still well off this time a year ago. Last year, 2.6 million people crowded the airports. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks are still up, but not by as much as they were just a while ago. The S&P has added to its 11% November rally. Trading's 24% below the 30-day average for this time of day, and the NASDAQ has jumped 1.2%. Let's take a look at exactly where the markets are right now, real time. The S&P is up 0.3%, up 10. The Dow is up 0.1%, up 40. And the NASDAQ's up 0.9%, up 108. The 10-year is up 9/32 with a yield of 0.85%. West Texas Intermediate crude oil is down 0.8% at 45.35 a barrel, with COMEX gold down 1.25% at 17.8870 an ounce. The dollar yen 104.08. The euro is $1.1953, and the British pound $1.3299. UK and European Union officials will resume face-to-face trade negotiations this weekend amidst last-minute warnings from both sides of large disagreements that could scuttle a trade deal. Prime Minister Boris Johnson says there are substantial and important differences to be bridged. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Paul Sweeney and Carol Messer on Bloomberg Radio.
Yes, indeed. You are listening to Bloomberg Markets on this Black Friday, and it is the season for holiday shopping. We know, though, this year it is not about doorbuster deals this year. It is about shopping in a social distancing world. And, Paul, I know you and Vonnie Quinn talked earlier with Dana Telsey. She said the consumer is pretty healthy.
Yeah, exactly right. And they're looking forward, despite all the craziness in the world here, the consumer does have some liquidity as well.
Yeah, well, let's get to somebody who's got a front row seat on all of this. Jim Fallon is editorial director of Women's Wear Daily. He joins us on the phone from Tarrytown, New York. So, Jim, great to have you here with Paul and myself. The Westchester Mall, not too far from you guys, but as we are hearing, colleagues are sending in, they're talking about the malls in Riverhead and so on and so forth, the outlets, everything's very quiet. It's a very different Black Friday this year.
Extremely different, and I think it's going to be a very different holiday season overall. I mean, if any time is going to be an online holiday, this is the year, and the question is, will it ever go back to what it used to be?
So, Jim, I think it was, as we've heard from retailers really over the last several years, we've heard about this concept of omni-channel, kind of, being online, bricks and mortar. Talk to us what omni-channel means to you and how we're seeing that play out this holiday season.
Well, omni-channel basically is now utilizing your brick and mortar assets in a way that is going to pretty much drive traffic to your website. I mean, I think Deloitte or Adobe predicted 116% increase in buy online, pickup in store, curbside pickup. So you're seeing Walmart, you're seeing Target, you're seeing all these retailers really using their store base to fulfill orders from online, especially with the surge in online orders and worries over delivery and things like that. So whereas omni-channel used to be, we have our store and we also have our website and we're bringing the two together. Now it's really how can we use our store base to fulfill orders from online? And yes, customers might come in, but not in the numbers that they used to.
Yeah, I got to say to you, I've done a lot of shopping already. And the packages, as I've warned our team today that I've got to listen for the door when packages are dropped because we have some porch pirates in the neighborhood, so I've got to be careful and get them. But what's interesting, Jim...
I don't want to know your neighborhood.
It's a good neighborhood. It's just they know the packages that are delivered are really good, too. But what's interesting is when I order, I think about... what's the exchange policy? How easy it? How much is it going to cost for shipping back and forth? Because I love shopping online, but I'm often ordering multiple sizes and doing things like that. But I look at the store policies, and that really determines where I shop a lot now.
No, that's a very good point, and I think consumers are going to become more and more wary and informed about those types of things. And also, the key crunch point is the delivery times. And, I think predictions are now that pretty much December 11th is going to be the cutoff. I keep hearing different opinions. On the one hand, a lot of people say, consumers are much more forgiving. They recognize the crunch on retailers. And so if packages don't arrive on time, they're much more forgiving. And I keep thinking to myself, they're forgiving until December 24th when they're waiting for that one gift for their loved one that's not arrived. So I think it's going to be a lot of pressure on retailers this year, particularly the logistics systems. And again, the benefit is how quickly they can leverage their store bases to fulfill those orders and drive the consumer to the store to pick up the product. Because again, that gives the retailer bigger margin. The key question of this holiday is going to be, yes, growth of online, but what are the margins going to look like?
Yeah, I was wondering, Jim, we're seeing boxes pile up outside of pretty much everybody's door up and down the street here. Talk to us about luxury. I mean, if I'm going to spend a lot of money on a luxury watch, does that also work in an e-commerce type of environment? Or do you find consumers want to go to the store, look at it, hold it, feel it, all that kind of stuff?
Surprisingly, the luxury players are saying that more and more consumers are shopping online for those very high-priced items. It's also forced those luxury players to offer those items online because luxury, very much to your point, was kind of snobbish about a lot of things, but very much snobbish about the online experience. They thought the consumer wanted that personal touch, personal service, had to be in the store, et cetera. Now, because consumers haven't been, stores were closed, they didn't have access to those consumers, so they were setting up a lot of online shopping, a lot of video conferencing type shopping, the retailers I've spoken to have said they've sold jewelry worth hundreds of thousands of dollars via video conference and just then drove it up to the woman's house and dropped it off, basically. So,
this is what I think. I think this is something that's really dramatically different. We caught up with the CEO of Watches of Switzerland, and they talked about how, the whole idea of online shopping shifted to, thank you, Zoom and all these other platforms, that we were setting up, sales personnel with customers online and doing, like we would be at a counter, right? Like the shifting, that we move to that, change in kind of how we shop, and that is something that will probably stay with us. And I think about that, how important that could be for especially luxury goods.
Very much so. And as I said, I don't think it may slip back a little bit when hopefully the vaccines take effect and people are protected against the virus and so forth. But this behavior is a fundamental shift in the way everybody's going to shop. And I think it's the combination of convenience. If you can get that personal service even via Zoom or whatever, then you might not travel to a store. And in a sense, traveling to a store versus getting the one-on-one Zoom experience, you might get better attention actually via Zoom, ironically.
So, Jim, what are some of the items that are hot this year, and what are some of the items that maybe are not?
I think, you're going to see the normal. Electronics seems to be taking off. A lot of TV discounts today. Apparel, the sweaters, the things like that. Jewelry may do well because, again, it's one of the few things that women particularly will be able to show off when they're on their conference calls on the computer at home.
Hey, I think guys like to show off like that new watch as well. I'm just going to put that out there.
Yes, that's true. That's true, very much. And so, very much tops because none of us wear bottoms when we're on the computers.
All right, full disclosure, I have a bottom on right now.
No, there you go. That's good. But ironically, you are seeing some growth in shoes and things like that. Yeah. What the consumers at all price points are beginning to do is they want to treat themselves. They're not eating out in restaurants. They're not going on vacation. So there's been this spending boom because it's like, I have this liquidity, as you mentioned earlier in the program. I want to do something with it. I need a treat. And so they're spending money on things that they might not wear right away, but they're kind of buying for when this horrible experience is over.
Well, Jim, have a good holiday season. I'm sure we'll be checking in with you throughout. Jim Fallon, Editorial Director of Women's Wear Daily, joining us on the phone from Tarrytown. And I got to say, Paul, I'm feeling like I'm going to make up with my family because it's just been such a hard time.
Yeah, exactly.
All right. You're listening to Bloomberg Markets, and this is Bloomberg Radio.
Bloomberg Markets is brought to you by your Tri-State Audi dealers. Add some thrill to your wish list during the Season of Audi sales event at your Tri-State Audi dealer.
You're listening to Bloomberg Markets with Paul Sweeney and Carol Messer on Bloomberg Radio.
Yes, indeed. You are listening to Bloomberg Markets. I'm Paul Sweeney here with Carol Masser. A couple of hours left to go here in trading. Yes. Coming up, we're going to chat with Ian Lustbader. He's a clinical associate professor of medicine at NYU. And Carol, we're going to get to the issue of the vaccines. Who should get priority for the vaccines and how to decide which vaccine you get?
Yeah, it's going to be really important in terms of distribution. So something we will certainly be tracking very, very closely. And we mentioned earlier some of the virus headlines, right? We talked about the UK, their transmission rate kind of signaling the virus is no longer spreading exponentially. So that's really important. But again, Paul, you're right. It's really about how this rolls out. So we have the perfect voice to talk to, joining us as he does every Friday, Dr. Ian Lustbader, who is clinical associate professor of medicine at NYU Langone Medical Center, on the phone in New York City. Ian, great to have you here with Paul and myself. I hope you had a good and safe holiday.
Yes, Carol. Happy Friday. Happy Thanksgiving to you and Paul. Hope you guys are doing well.
We're doing okay. Watching kind of some of the headlines here. We were talking earlier with our team over at Johns Hopkins, talking a little bit about Thanksgiving being maybe a make or break moment for the U.S. regarding the virus. How do you see it? Do you think we bend the curve down, or more likely do we bend the curve up here?
No, I think we're going to see more cases, and this is typical of pandemics. 1918, Spanish flu, we saw these waves coming through. You know, we are getting in New York, 20% or so, it's estimated, of New York City have positive antibodies. And fortunately, although the cases are going up a bit, New York and hospitalizations are going up a bit. Certainly the Midwest and West are really suffering more dramatically. They had an easier March and April, and now they're really unprotected. And I think the surge is certainly challenging the hospitals. But we do have, I think, very encouraging information, you know, on the vaccines, even the AstraZeneca vaccine, which I know people were a little perplexed about the lower antibody and lower efficacy. And I think we have some ideas why that may be. And actually, it's useful information about perhaps a better way to dose that particular vaccine, which is called a viral vector. We can talk about that. And then we need to talk about, you know, when these all are distributed, you know, who will get these, and everyone, my patients are saying, when can I get the first dose? But it's going to be months away for your average patient.
So, doctor, how am I as a patient, when I walk into an office and it is time to get that vaccine, am I going to care which one I get? Is there going to be brand loyalty? Is there going to be, I'm going to have a preference for this versus that? How is that going to be determined?
That's a very good question. You know, it may not be up to the patient. It may be what's available and what's distributed. This whole Operation Warp Speed has been very unique in the sense that in prior, you know, epochs, we developed vaccines in a very slow, methodical way. Typically, you would get the virus and you would inactivate it. And so the virus itself would generate an antibody response from the patient that it was injected into. And you would have a variable sort of response to that. And usually it was 40, 50%. We've developed some other interesting ways, messenger RNA, which is basically a very small molecule that all mammalian cells have. And that's really what goes from the DNA, and it communicates to ribosomes to make these proteins. So isolating the mRNA, both the Pfizer vaccine and Moderna, basically take over our cells' machinery and make this spike protein, and it's highly effective. We didn't know it would be 90% effective in generating these neutralizing antibodies that bind to the virus when you get it and activate it quickly so you don't succumb to a severe disease.
Hey, Paul.
The AstraZeneca.
Oh, I'm sorry. Go ahead, Ian. No, please continue.
Yeah, I was going to say the AstraZeneca is slightly different. It uses this adenovirus vector, which basically is a chimp cold virus to kind of gain entry into the mammal cells. And it's coded also with that spike protein information. But it turns out that when it's given in this full dose to as a first and second dose, it seems a little less effective. So people were getting panicky about the AstraZeneca vaccine. Why isn't it working as well? Can we even use it? But it turns out accidentally that a subgroup of patients got a half dose and seemed to have that 80-90% neutralizing antibodies. And it probably is because, there are a lot of theories, that the body with that half dose doesn't form antibodies to the actual injection itself. So it kind of hides, and when that second dose is given, you generate that 90% neutralizing antibodies. So I think that that is encouraging. I don't think we should get panicky about it. Now, how each doctor's office or hospital will determine which vaccine or what's available, part of that is based on where it's stored. As you know, the mRNA vaccines generally need to be very, very cold storage. You need special freezers. The AstraZeneca and some of the vaccines don't need to be kept at, minus 70 degrees.
Right.
So there are a lot of factors in that.
Hey, Ian, one thing I wanted to ask you, and certainly there's been a lot of coverage, and you know this, about, what happens when an individual gets COVID and the body's own immune response, kind of goes into overdrive, but that can have a longer lasting impact on the body itself. How is it different from a vaccine? Is it, as you said, just neutralizing, so it's not like our immune system kicks into gear, if you get the vaccine? It's different, right?
Totally different. Exactly. When you get the real infection, some patients, and it's unclear what's different about those immune responses, have what's called cytokine storm. The body seems to almost overreact to the virus and causes clots and a whole variety of, brain fog and long-term effects and short-term effects. Here, it's only the spike protein, not the actual virus, so there's no real viral replication. There's no chance with any of these vaccines of actually getting COVID. So this is just inducing your body to form a response, antibodies to one spike protein. They didn't even know that would work. Would this vaccine even work? But it turns out that's a key protein, and it works very well when the body forms antibodies to that spike protein and really neutralizes the virus well. So I think these are going to be breakthroughs, and we do have to hang in there a few more months until that's available. And more drugs are coming along. Lilly has a monoclonal antibody, Regeneron. So, these are not widely distributed, but for very sick people, both before they get in the hospital and in the hospital, we have a few new drugs coming along that I think are exciting.
So that's kind of where I want to go, Ian, is the therapeutics. We spent so much time talking about vaccines, but where are we now in terms of a health system vis-a-vis March, in terms of really treating people that do come into the hospital with COVID?
So, it seems like a long time, but it's not even been a year. February, March, when the first cases were coming in, and it really is amazing to have developed all of these responses, and we've learned a lot along the way. And certainly what we learned in the Northeast, in New York, in March and April, when literally the hospitals were overflowing, every bed was a COVID bed. Now it's much, much less than that, probably under 10%. The Midwest can benefit, and the West and South can benefit from that, because we do treat patients differently. First, we now have available, released this Lilly drug, which is for outpatients. It's not widely available, but that's a monoclonal antibody. And for inpatients, we do have, the Regeneron cocktail. Unfortunately, we don't have really great antivirals. Remdesivir, that was used in a cocktail in hospitalized patients, turned out to be not all that effective, the Gilead drug. Steroids and blood thinners do seem to help a lot of people. So kind of our per capita death rate is not skyrocketing like the number of cases. So we're certainly, even though we're seeing many more cases, some people estimate, we're now at 11 million. It could be up to 20 million by when all is said and done. And we're at 250,000 dead. 300,000 is not unlikely. We're definitely treating people earlier and in a different way, and I think it's a bit more encouraging.
Yeah, we definitely have made some progress, right? We just understand, we know what we're looking for. And as you said, we've developed treatments. We did not have these treatment playbooks back in March and April, and that has certainly made a big difference. Ian, sit tight for a second. We're going to do a little bit of news, and then we'll come back and talk some more. We're going to get back to Ian Lustbader, Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us on the phone in New York City. This on a day when we do see some pretty tough news. Global cases exceeding 61.1 million when it comes to COVID-19, deaths topping 1.4 million. And we know that hospitals are definitely being strained. The systems, we're seeing that. You are listening to Bloomberg Markets. I'm Carol Massar along with Paul Sweeney, and this is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks are starting to fluctuate now in thin post-holiday trading. Investors are assessing valuations along with the pandemic. Oil is retreating amid rising tensions among OPEC Plus members. The S&P did add to its 11% November rally, but as I say, it's now fluctuating. Let's take a look at those numbers. The S&P is up 0.2%, up 6. The Dow is little changed, up 15, and the Nasdaq is up 0.9%, up 103. The 10-year's up 11/30 seconds with a yield of 0.84%. West Texas Intermediate crude is now down 0.8% at 45.33 a barrel, with COMEX gold down 1.25% at 17.8840 an ounce. The dollar yen 104.05. The euro $1.1957, and the British pound $1.3302. That's your Bloomberg Business Flash. Now for a look at world and national news from our Washington, D.C. newsroom, Nathan Hager.
All right, Greg, thank you. We're seeing thin shopping on this Black Friday. Little surprise with pandemic restrictions still in effect. But for those who do show up at the stores today, good luck finding that PlayStation 5. This guy lined up with his mom outside the GameStop in chilly Thornton, Colorado overnight to get his hands on one.
I finally said, okay, I'm going to stand out here, and I've been here since 4 p.m. on Wednesday.
Online shopping, meantime, is holding up. Adobe Analytics says shoppers spent a record $5.1 billion on Thanksgiving Day. That was actually nearly $1 billion less than expected. The firm says many people may be holding out for big-ticket items on Cyber Monday. President Trump has finally acknowledged he may have to move out of the White House January 20th. His spokesman says he will be in Georgia a week from Saturday to campaign for the 2 Republican senators in that state's runoff election. Bloomberg's Irv Chapman reports.
Senators Perdue and Loeffler are seen by many Georgia Republicans as insufficiently loyal to President Trump. Ed Mills, policy analyst with the firm Raymond James, said in a Bloomberg interview.
Those 2 incumbents are campaigning on this idea that their victory is a check on the Biden administration. There's a lot of Republicans who are not willing to accept that there will be a Biden administration. Will the Republican voters show up again in January? It is a possibility that Democrats will have a majority in the Senate.
Mills said the Democrats also have their work cut out to bring Biden voters back to the polls. In Washington, Irv Chapman, Bloomberg Radio.
The head of Iran's armed forces says, quote, severe revenge awaits the terrorist groups and perpetrators behind the attack that killed nuclear scientist Mohsen Fakhrizadeh. State media report he was killed in a shootout in eastern Tehran today. Iran's foreign minister says there are serious indications of an Israeli role. Israel has said Fakhrizadeh led Iran's military nuclear program before it was disbanded in the early 2000s. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. In Washington, I'm Nathan Hager. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Carol Masser on Bloomberg Radio.
Paul Sweeney here with Carol Masser. This is Bloomberg Markets. We are joined with Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center. He is with us for some more time, which we appreciate, Dr. Lustbader. Let's talk about refrigeration. I'm really fascinated by some of these incredibly cold temperatures that many of these vaccines have to be stored at. And is it fair to assume that here in the United States, we have that refrigeration capacity and that it should not be an issue for, I guess, Western societies? Is that a fair assumption?
Well, not every doctor's office has freezers that go down to, minus 73, minus 90. I suspect what's going to happen is there will be central distribution of that vaccine, and it may turn out on a wider spread that the Pfizer vaccine may be more challenging. Every vaccine seems to have its pro and con. Certainly the Moderna, Pfizer mRNA vaccines, although they need to be kept refrigerated in the Pfizer at sub-zero temperatures, they're highly effective. The AstraZeneca needs only to be kept in regular refrigeration. So there are pros and cons on a lot of these vaccines, and I suspect where they will be available and who they'll be available to will really be based on, who has the freezers. Well, certainly your average doctor's office is not going to be able to afford these very specialized freezers, so they will not be able to get that vaccine. I suspect there'll be central distribution. Hospitals will probably be getting these because they can have these refrigerators. And just like we send a lot of people to, hospitals for nasal swabs and testing for COVID, I suspect people will be lining up and making appointments to get vaccines when that's available. Although probably it's going to be first given to healthcare workers, people literally in the ICUs, front lines, the doctors or nurses there, and probably outpatient doctors and nurses, the elderly, nursing homes and people over 65. And then really the rest of the population, probably sometime we're thinking, spring or early summer. So this is not going to be over yet, but certainly, hopefully, as patients seem to do well, there'll be less vaccine hesitancy and people will be more enthused about signing up when they really become widely available.
Yeah, we've talked a lot about that with you in terms of, the scientific, confirmation that this is indeed going to be safe. And I think you're right that as more people take it, I think people will see that it is safe and that more people will be inclined to do it. What I do wonder, listening to you talk, Ian, is in terms of the storage required, the extreme cold storage, at least for the Pfizer vaccine, this is where we need kind of a federal government, plan in saying, well, maybe we create facilities, especially in major cities, where people can go and get the vaccine. Like, is this where we really need the government to step up and say, here's what we're going to do, provide those cold storage facilities so we can get it out there?
That's my bet. I think this is going to be very similar to those movies where you've got the military actually helping to inject large numbers of people, with access to central areas of refrigeration or, cold storage. We have so many people, 300 million people to vaccinate, 8 billion worldwide, that, distribution, certainly in other countries that have storage issues, it's going to be a slow process to get global vaccines done, which is some advantage to the AstraZeneca, even if it is only 62% effective. Before this whole vaccine was available, Dr. Fauci was talking about we'd be thrilled if we had a 50 or 60% efficacy. And so we got that, and people are like, no, we're disappointed. We got spoiled by the early mRNA data. So I think different areas of the world, different areas of the country will have different vaccines. And I think all of them, at least to my reading of the data, are fairly effective and safe so far, which I think should be very reassuring to people. In the meantime, we do need, as we've said before, masks and distancing.
Right.
It does turn out that in households, even though there is some risk, those pods, it does seem to be only about a 17 to 20% chance of people in the same household of getting COVID, even though we've heard stories, terrible stories about parents dying and rampaging through households. It turns out that for most families, even if one member or two members, it doesn't necessarily mean everyone in the household will get it. Part of that may be their immune system or other immune issues, but it is not, if one member of the family has it,
right,
don't necessarily mingle. It's certainly fine to isolate, but I don't think people need to panic that it's a death sentence.
Yeah.
Because it does seem, although transmission is common, it is by no means everyone will get it.
Well, that's good to know. Hey, quickly, I just wanted to follow up on the vaccine. So my expectations are the developing nations are going to have better access than some of the developing world. If we do not take care of the developing world, what's the possibility that we have to deal with another wave or COVID sticking with the world much more longer as a result? And just got about 30 seconds here, Ian.
My sense is that the vaccines are ahead of schedule, that hopefully distribution will be ahead of schedule, and I think we will do much better than anticipated in terms of shutting this down, certainly in the West and hopefully around the world as well. So I am optimistic. We just have to stay safe for several more months, and hopefully we can juggle it, but I'm optimistic.
My bad. I think I had too much turkey and too much wine because I thought we had to rush Ian, and apparently we have 6 more minutes. But that whole idea, right, of making sure we take care of, I blame the turkey, I blame the rosé. But this whole idea that we do need to think about, I know the Bloomberg New Economy Forum that was just held, like talking with global leaders, Prime Minister Modi was there, the importance of making sure we do, though, take care of the developing world.
Yeah, no question about it. This is a global problem. Again, we have to put this a little bit in perspective, right? We had 50 million dead in 1918. We've had some great technological breakthroughs. Globally, we're about 1.5 million. It's terrible. Every life is important. I don't think we're going to get anywhere near that number of the Spanish flu. There were 600,000 plus in the United States with a smaller population that succumbed to the Spanish flu. We're at 250,000. I think we're really just a few months away from a lot of people getting really the most vulnerable getting vaccines. I know everyone's in a panic about it.
Yeah.
Friends and family I speak to are certainly in a panic. But the people on the front lines, the elderly, well, not so elderly, people over 65, I think those within an early, January, February, there are going to be a lot of people getting vaccines, and I think that will really bend the curve. Unfortunately, a lot of damage is done. In other words, we've lost a lot of people, we've lost a lot of businesses. Stopping the COVID-19 will be helpful, but the damage to real estate and restaurants and travel, that's maybe several more months. That damage will not be as easy to reverse, even once everyone has the vaccine. But I think in the next few months, we're going to see a lot of positives.
Hey, Ian, talk to us about what percentage of the population really needs to get the vaccine for it to be effective. I'm not sure if the right term is herd immunity, but as you well know, in this country, there's a lot of folks who do not get vaccines. How do you think the numbers are going to play out with this vaccine?
Yeah, Paul, you're exactly right. I mean, that is a little bit of a moving target. We don't know exactly the number for herd immunity. In other epidemics, it's somewhere in the 60 or 70% range, meaning either 60 or 70% of the population has to get the infection, which we know is not a good thing here because this virus is more lethal than influenza. Or 60 or 70% of the population is going to have to get antibodies so they don't get infected. So that is a high bar, and there are a number of people who have vaccine hesitancy, which, based on what I'm seeing, is not really appropriate here. These vaccines seem really amazingly safe, with really just a handful, maybe, of potential side effects. It's not even clear. The number of side effects is so low, it's not even clear that they're vaccine related or they're just incidental issues. Unfortunately, any vaccine, anytime you tamper with the immune system, there are some people who will have surprising effects, and they can include, Guillain-Barré, which is this ascending paralysis, or a transverse myelitis, where part of the spinal cord gets inflamed. We see this with influenza. Not every, and basically everyone who works in a hospital or healthcare setting has to get a flu shot, and we give out millions of doses. But the reality, that shot still has some risk of side effects, not from getting the flu, but there are, rare immune responses. And I think we'll probably still see it with these vaccines, but there have not been a lot of issues, with the phase 3 trials, which are, 30,000, 40,000 people, and there are more that are going on. So I would encourage people also to enroll in vaccine trials, whether, at NYU we have a number or around the country, because A, it's a way, if you're otherwise healthy, of potentially getting the vaccine, and B, it will help us discover, really the effectiveness. But the safety seems very good, and I think people will have to, hopefully accept that data. But as long as we're getting that 60 or 70% antibody, I think we will be in good shape. And it certainly looks like the antibodies to these vaccines are better and longer lasting than even getting the infection itself.
That's interesting. We actually had the CEO of Medable on, Dr. Michelle Longmire, on Wednesday, and that's specifically what they're doing. They're using technology, but it's about connecting people, patients, individuals with vaccine trials for COVID. They do it for all kinds of medical trials, but they are working pretty actively when it comes to COVID-19 as well. Ian, like I always say, we get so much when we talk to you and learn so much. So thank you so much. Dr. Ian Lofsbader, he's Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us on the phone as he does every Friday in New York City. Listen, Paul, I think about it. Are you ready to take a vaccine?
Absolutely. I'd take it today if it was offered.
Yeah, exactly. And I think we'll see that rollout, and hopefully we'll have the federal government involved in terms of that cold storage that's so necessary, so many things that are needed to make sure we can get it out to the people, and certainly the most vulnerable, and certainly those on the front line. You're listening to Bloomberg Markets. Carol Master, Paul Sweeney, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Carol Masser on Bloomberg Radio.
Coming up, we're going to chat with Tom Gimbel, CEO of LaSalle Network, get his thoughts about the employment market in this country. Stubbornly high numbers. Plus, Lester Munson, principal at government relations firm BGR Group. We're going to get all things Washington, D.C. We're going to get a little political, Biden transition, stimulus, all that good stuff. But first, let's go to Greg Jarrett for a Bloomberg Business Flash. Greg.
I'm always here for you, Paul. Stocks have paired gains to trade little changed and thin post-holiday volume as investors assess their valuations and also check out the pandemic and what's going on with that. Oil's retreating because of tensions among OPEC Plus members. Let's take a look at what's going on here in the markets. Right now, the S&P 500 is little changed. Dow Jones Industrial Average is down 0.2%, down 50. And the NASDAQ is still up 0.8%, up 94. The 10-year is up 11/30 seconds. The yield is 0.84%. West Texas Intermediate crude's down 0.25% at 45.59 a barrel, while COMEX gold's down 1.3% at 17.8820 an ounce. The dollar yen is at 104.06. The euro $1.1954, and the British pound $1.3305. Let's take a look at silver. We haven't done that in a while. Silver's down 3.7% at 22.55 per ounce. Now that's a Bloomberg Business Flash. I'm Greg Jarrett.
It is indeed. All right. Greg Jarrett, thank you so much. You're listening to Bloomberg Markets. Carol Masser, Paul Sweeney. We just had a headline crossing the Bloomberg. President Trump's Pennsylvania election suit rejected by an appeals court. So again, we know the president still has some legal actions out there. Pennsylvania, key state, but again, the court's ruling against President Trump and his legal team there. All right, so we need to talk a little bit about what's going on in the labor market. We know the president-elect, Joe Biden, is going to inherit a tough labor market. So let's get into it with Tom Gimbel, who's founder and CEO of the staffing and recruiting firm LaSalle Network. He joins us on the phone from Chicago. Tom, nice to have you here with Paul and myself. How are you?
Doing great. Good to be with you. Hope you had a happy Thanksgiving.
We did. I did. I hope you did as well. So talk to us a little bit about the labor market and the employment scene that Joe Biden and his team are going to be dealing with come January.
It's an interesting dynamic because what we've seen since the quarantine COVID situation has been on us back at the end of March and April is the fact that the majority of the unemployed have been service professionals. And so when I say that, you're talking hotels or airlines or hospitality, restaurants, so on and so forth. And that's a very different ball game than what we could be coming into if we have white-collar unemployment. And if that begins to come and really get aggressive and inflate the numbers over the winter, then the Biden administration and the country as a whole is going to have a much bigger can of worms to deal with.
That's kind of where I wanted to go, Tom. I'm trying to get a sense of, when we first got into this pandemic and the jobs just, cratered, there was some expectation that that would be temporary. And then once we got to the other side of this, those jobs would come right back. Now I think there's growing concern as we look at, 8, 10, 11 million people that have been on the unemployment rolls for, months now, that a lot of this is going to be permanent. How are you thinking about that?
Well, I don't know if it's going to be permanent. I mean, look, we got up to a high of over 30 million unemployed. Now we're back down into the lower 8 figures. So the numbers have improved, and we do see that the really interesting thing is the majority of unemployed people, as I stated, continue to be in that service sector. And what we're seeing is how many people that tourism and hospitality actually employs in this country. Yeah. I think when you talk about permanently unemployed, it's really more about permanent jobs going away. People are still employable. And what we've got to do is have a recalibration of the mental mindset. And hopefully this administration can tell people that you've got to fix your own problems. And you've got to get out there. And if the restaurant job went away, but the Amazon job is there, that's where you go. And I strongly believe that once the vaccine comes out, and I think the stats I saw were still that 4 million people traveled on airplanes over Thanksgiving. There's still 4 million people. So it's way down. But there's still a lot of people that are traveling, and when this vaccine comes out, you're going to see those numbers increase.
I got to say, Tom, I am so worried. We talk with Peter Atwater over at William & Mary. I need to get him back, but that whole idea of this K-shaped recovery, there are people who, a lot of us, haven't even felt this pandemic in a lot of ways, at least not when it comes to our job or economically, right? And there are others who have just felt all of it. And I do wonder, I see my supermarket, they've just inserted, and it's a small market, but they did self-service lines they've added. And I do think about, well, what's the impact that that's going to have on some of the people who've been working there? And I know some of that's because of increased volume, but I do wonder about those service jobs that are going to go away and those people who will be once again extremely left behind.
People are usually left behind when they don't choose to make alternate paths. And I'm not being a hardliner. I'm just saying that if you're in an industry and you're going to have to make a transition, you have to realize that you may not be able to start out at the same level as where you were at. So financially, you take a step back. Maybe you actually may have to move to a part of the country that has jobs that match up with your skill set. And this country was built on it, whether it was the founding of America, whether it was exploring West, Lewis and Clark. You adjust, you adapt.
But people don't move around, Tom. You know that. Mobility in the United States has been down for decades.
because Americans have become more entitled. And I think that if people realize that in order to get the job I want, I'm going to have to move. It's called seizing opportunities. And that's not a bad thing. There are jobs. It may not be where you want it. It may not be doing what you wanted to do. But if your kid said, I'll only take a job where it is, doing what I want, you would say, are you an idiot? Go get a job.
Let's talk about... So, all right, Tom, let's talk about the college graduate. That's near and dear to my heart, having a couple going to be entering the workforce this spring. What's the outlook for recent college grads?
So that's a really interesting dilemma. Number one, it's going to be much harder to onboard people in a virtual environment, and it's going to be harder for the person graduating who's never been in a work environment and never done the job versus people who have. So the onboarding is going to be hard, and when to turn it on and when to turn it off. And this is, I was just talking to a group of college graduates a couple months ago, and I said, or soon-to-be college graduates, this is going to be a really huge problem, because if you've been in the work world, you know when to turn off, if you turn off, when to respond to things, because you've been in an office and expectations have been there. You're going to get a lot of kids that come out of college and they think that work is 9 to 5, and they're going to turn off at 5, and they are going to miss a lot of things, and they're going to get passed over by other people. So I don't think the outlook will be terrible to get the job. I think it'll be harder for them to keep it.
Paul, when's the last time you did 9 to 5?
Yeah, exactly.
Listen, so what's the recruiting scene like right now, Tom? What industries are out there recruiting? What's kind of some of the activity that you've seen?
So we service a bunch of different verticals, and our company had the best 2 weeks in a row in the company's history, and November will be the best month in our company's history. And we're seeing that in IT, placing IT professionals, placing accounting professionals, placing human resources, placing call center folks. I am seeing that companies across the board are bringing people on. And there are layoffs in certain areas, but then they hire in other areas. And you're going to continue to see that through, my guess is, middle of February, because then we'll know if we're getting the second stimulus. And if that package comes through, I think we're going to have a really, really good 2021.
Well,
and I
fingers
think that's
crossed.
where
yeah.
I believe it. I'm very optimistic about what's happened, how the other stimulus package pushed things through over the summer.
Right, and let's hope it's for both parts of the K, the upper and the lower in particular, that they're taken care of. Tom Gimbel, founder and CEO of the staffing and recruiting firm LaSalle Network, on the phone from Chicago. You know, Paul, you got to watch that labor market and see what
absolutely.
What
and those jobless claims are stubbornly high every Thursday.
Exactly. You're listening to Bloomberg Markets, and this is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, off session highs, the S&P continues to hover near an all-time high after rallying 11% in the month of November. Trading's 23% below the 30-day average at this time of day. The Nasdaq did jump. The stock market closes at 1 p.m. Wall Street time. While bond trading ends 1 hour later, treasuries are advancing. The dollar heads for a second weekly decline. Let's see where the numbers stand. Right now, the S&P 500 is back up 0.1%, up 4. The Dow's little change, down 4, and the Nasdaq is up 0.8%, up 100. The 10 years up 11/30 seconds. The yield 0.84%. West Texas Intermediate crude is down 0.6% at 45.45 a barrel. COMEX gold's down 1.25% at 17.8830 an ounce. The dollar yen 104.06. The euro is $1.1952, and the British pound $1.3307. Now, with a look at world and national news from the Bloomberg Washington, D.C. newsroom, Mr. Nathan Hager.
Thank you, Mr. Greg Jarrett. A federal appeals court has rejected President Trump's latest attempt to revive a lawsuit aimed at undoing Pennsylvania's certification of Joe Biden's win of that state's 20 electoral votes. This decision moments ago comes a day after President Trump held his first question and answer session with reporters since the election. He was asked about his concession.
So if the Electoral College does elect President-elect Joe Biden, are you not going to leave this building?
Just so you, certainly I will. Certainly I will. And you know that.
Still, the president does continue to make unproven fraud claims. Today's decision in Pennsylvania could tee the case up for the Supreme Court, but most legal experts doubt the High Court would take up a case with little evidence and which would not change the outcome of the presidential race. Today is traditionally the busiest shopping day of the year, but thanks to the pandemic, this Black Friday is anything but when it comes to crowds. For those who do show up, good luck finding a PlayStation 5. This guy waited in line for hours for one at the Cherry Hill Mall in Philadelphia.
We can't get them, so we have made a choice. Either you're going to pay double the price or come out and spend, some hours. So that's what we did.
A lot of people are spending money online as well. Adobe Analytics says a record $5.1 billion were spent on Thanksgiving Day online. That was actually nearly $1 billion less than expected. Iran says Israel was likely behind the assassination of one of the country's top nuclear scientists. Mohsen Fakhrizadeh was the head of research and innovation at Iran's Ministry of Defense. State media say he was killed close to the Damavand campus of Islamic Azad University in eastern Tehran. Iran's foreign minister says there is serious indication of an Israeli role. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. In Washington, I'm Nathan Hager. This is Bloomberg.
You're listening to Bloomberg Markets with Paul Sweeney and Carol Messer on Bloomberg Radio.
This is indeed Bloomberg Markets. I'm Paul Sweeney alongside Carol Masser here. Well, despite some last-minute legal challenges from the Trump administration, it appears that the Biden transition is gaining momentum. We're getting some picks for the cabinet and, again, making some movement here as we make our way towards January 20th. To get the latest, let's welcome Lester Munson, principal at government relations firm BGR Group. He also serves as an adjunct faculty at Johns Hopkins University in Baltimore in politics. So it's interesting, Lester, after some fits and starts, the transition is taking place. What do you believe should be some of the priorities for the first 100 days of a Biden administration?
Well, I think the most important priority is the pandemic and making sure that when President-elect Biden takes office, that he and his team are fully aware of everything that's going on inside the U.S. government and elsewhere so that they can, of course, using their judgment, keep doing the things that are working and identify the things that are not working and try to do them better. That is clearly the biggest issue facing the country right now for both our public health and our economy. So that will be by far the biggest priority in the first 100 days.
Right. We can't move forward unless we can get the pandemic, the global pandemic, the pandemic here in the U.S. under control. Lester, you are someone, though, who has spent 3 decades on Capitol Hill. You've been in the executive branch. I mean, we could spend the next half hour talking about your background. You understand how Washington works, but you also understand it with an eye to where the U.S. plays a role globally in foreign affairs. Having said that, so COVID got to be our number one domestic policy. What has to be, or what are the areas of the world that we need to be focusing on when we look at our foreign policy from the get-go come January?
Well, that's a great question. And there are a lot of things going on in the world right now. We just heard the news about the killing in Iran of the nuclear scientist. Clearly, U.S. policy towards Iran is going to be a very hot topic in the first 6 months or so of the Biden administration. The way he treats the rise of China will also be a very big issue. And frankly, it's on these two issues where President-elect Biden is going to have probably his biggest battles with Congress. There's the question of going back into the Iran nuclear deal or perhaps creating a new one. There's just a whole litany of policy issues with China that he's going to have to make decisions on. And then probably in the background is going to be climate change issues. He's looks like he's going to appoint John Kerry as his climate czar. That's going to be seen as a little bit controversial on Capitol Hill. So I think that'll probably be a tertiary issue, but a hot one also.
Right. And Paul Sweeney and I have spent a lot of time over the last week or so talking about, as we've seen the formulation, the creation of a Biden cabinet, particularly his choices for positions. It gives us some window into what kind of cabinet it will be and what it will be, its priorities and maybe its tack. With something like a China, you can't think about anything, whether it's the global pandemic, whether it's climate change. China has a role in all of it. What do you see has to be the policy when it comes to China? Many have said it's got to be a continuation of what we've gotten from the Trump administration, maybe just handled a little bit differently.
Well, I think it's fair to give some credit to the Trump administration for recognizing that China is more of a challenge than it is an opportunity. And so he's taken a number of steps to kind of reverse course on U.S. policies in the last 4 years, but it hasn't been a totally coherent approach. So a smart play, I think, from President Biden and his team would be to bring some coherence to the way the U.S. is approaching the relationship with China. Let's take some steps to bring our allies in Europe and in Asia along with us instead of just kind of doing a blunderbuss approach that seems to irritate as many people or irritate more people than it doesn't. So I think that's a real opportunity for the president. He's going to face some skepticism from Capitol Hill, but he's a known quantity up there. And President Biden, I think one of his strengths will be he knows how to talk to senators, he knows how to talk to members of the House. If he can bring enough Republicans along with him, we could have a better policy that's more coherent for the rest of the world.
So, Lester, President Trump's international strategy in part can be defined by America first. And so we saw during the past 4 years, a lot of our typical alliances and our allies have been, maybe not dealt with in the same way as, historically. Is there any sense as the Biden administration tries to reconnect and with these allies that they, in fact, will welcome us back into the global diplomatic scene?
Well, it's almost like the stock market. I think people are already expecting it to happen, so they're kind of building it into their expectations, right? We know he's likely to say nicer things about our allies in NATO. He's not going to be imposing economic sanctions on allies like Canada. He's going to get back in the World Health Organization. He's going to take some kind of fairly straightforward steps that everyone's going to appreciate. But I think that's already kind of baked into the cake. So our allies are going to be looking for those next tougher decisions from the Biden administration. What do you do about China? What are you going to say to European countries that are, frankly, less concerned about the Iranian nuclear program than we are or some of our Middle East allies are? How is he going to decide those tough questions? People are already starting to think about that.
Yeah, it's just, man, there's just so many big issues. But no doubt it will be a very different administration in terms of its tack. But as you said, some of the policies need to be, whether it's China. I love what you said about China more of a challenge rather than an opportunity, which is not certainly how the business community has seen it for a long time, just wanting to kind of have more of a position, certainly in China, if you think about it. Do wonder... I'm just trying to, I'm sorry, are we running out of time? Nope, we're going to 56. So let me ask you about the business community. Sorry, I'm on a different clock. I'm usually in the afternoon, so I'm like thrown off on the Bloomberg clock today. One thing, Lester, I do wonder is the business community in the role of something like China, right? When it comes to human rights abuses or just, the business community, the global business community for decades has been salivating about having, a position there, right, to tap into their huge market. China, we know, is increasingly developing its domestic market. What is the role of business in all of this?
Well, I believe that it's actually the business community that has driven a lot of the skepticism in the last few years of China. They may not be concerned about human rights and democracy so much, but they are concerned about intellectual property, about the rule of law, about protecting their investments in China from corrupt predations from the Chinese Communist Party there. So the business community does have deep concerns about China because it's already invested and it wants to protect it. Is that going to change going forward? I think it's modulating a little bit, but I think generally the business community is still very skeptical of China. We're not seeing investment there the way we used to. I think broadly speaking, the big international business community is looking elsewhere to make investments because of these rule of law and intellectual property issues.
So, Lester, just in terms of China, what do you expect the Biden administration? I'm not sure if it's articulated any kind of strategy here to date, but about the tariffs, that was such a big issue pre-pandemic in particular. What do you think the Biden position will be on some of these tariffs, particularly on China?
Well, I hope it's more skeptical because the evidence shows that the Trump administration's approach to tariffs didn't work, at least in the larger aggregate. Our manufacturing jobs went down. Our trade deficit with China increased despite massive new tariffs. So tariffs as a solution to those issues does not work. Can it occasionally work to help you get a better negotiating position? Sure. But do we expect Beijing to negotiate fairly with us on some of these economic issues? I think you're going to continue to see a lot of pressure on this administration, as there was on the Trump administration. There'll be pressure on Biden to pull apart the economies, particularly as it affects the medical sector and the national security sector. So anything relating to communications and things like that, there's going to be huge pressure to disassociate the economies. And I think we will take steps in those directions, but in a different way, hopefully in a more coherent way than the Trump administration did.
Do we get, Lester, the support that we need from our allies, or are we headed for really this world that's divided between I'm on China's side, I'm on the U.S.'s side?
It'll definitely look and sound better in terms of our allies, but real challenges remain. Russia's on the rise. Turkey is on the rise. They're running into each other in a bunch of different places around the world. We haven't really picked which side we want to be on. Maybe it's smart not to pick a side, but those dilemmas don't go away. We can't just pretend because we're going to be nicer to people that somehow our interests are going to be better protected in the world. It doesn't quite work that way. It helps to have diplomacy. There's no doubt. And not embarrassing people in public is a good thing, but we have to work hard at the real differences. We don't have the same approach to the Middle East that our European allies do. It's going to take a lot of work to get them closer to us.
Yeah.
So, Lester, do you believe the U.S. under the Biden administration will try to re-engage with the Trans-Pacific Partnership or some version of that? Because the proponents of the TPP at the time said this is the best way for the world to deal with China.
Well, right now they're saying they're not, but that clearly is an opportunity, some sort of multilateral trade agreement with other countries that are concerned about the rise of China is, in the long run, a necessity for the United States. Right now, the Biden administration isn't saying they want that. There are some tough political issues here back home for both parties on it now. You saw both, remember in 2016, both candidate Trump and candidate Hillary Clinton disavowed the Pacific trade deal. Right, even though it was negotiated by the Obama administration, Hillary Clinton walked away from it. So there's just a lot of domestic pressure there. But in the long run, it's absolutely necessary. Hopefully the Biden administration will start building a case, at least to its party, that it's a necessary thing.
Hey, we just have a few minutes left here, and I do wonder, you, during the Bush administration, were part of the U.S. Agency for International Development, and you were involved in global health issues. We got a lot of warnings, whether it's Bill Gates and the Gates Foundation, that, the thing we needed to be worried about was some kind of health pandemic. And I think the world largely ignored it, or at least certainly the developed world. And yet here we are. Have we learned our lesson? Will we take the steps in your view? Are you seeing signs of that we can make sure that we're not in a situation like we were here in 2020 because of COVID?
Yeah, I'm no doctor, and I am certainly not a global health expert, but I will tell you, it's my view. We've learned a lot through this process. Some things work, some things don't. I think the Trump administration deserves a lot of credit for what it's done with vaccines. Operation Warp Speed appears to have been a terrific idea that hopefully is going to produce a really good result here in a few months. On other things, maybe they didn't take the right approach. The one thing we do know in a situation like this, you need clear, consistent, truthful messages from government so that the people remain trustful. You can't stand on one foot one day and stand on another foot the other and say that you haven't moved. You've got to be clear. If masks are a solution, let's talk about them openly and honestly as we should. Social distancing, if that's a solution, we need to talk about it openly and honestly. And I think the current, the Trump administration really struggled with that because of the politics, which is a shame. Hopefully, the new administration will kind of recognize what worked and what didn't and react accordingly. We need to have President Trump arguing with his top doctor is a terrible thing to have happen. President Biden should not do that.
Hey, Lester, thank you so much for joining us. We really appreciate your thoughts and insight. Lester Munson, principal at government relations firm BGR Group. He's also serves as an adjunct faculty at Johns Hopkins University. Join us, give us the latest on Washington, D.C. And Carol, the Biden administration is going to have a very big to-do list when it gets in office January 20th.
Yeah, no doubt about it. And to be fair, I mean, I think most people do agree the Trump administration, what they did with that race for a vaccine is pretty remarkable. We didn't have the playbook, and so we were all kind of learning as we go. But you're right. Biden administration, they're going to be busy from day one. This is Bloomberg.
I'm Greg Jarrett with a Bloomberg Business Flash. Stocks have come off earlier gains to trade little changed and thin post-holiday volume as investors assess valuations with pandemics still raging in parts of Europe. And the U.S. oil retreats amid rising tensions among OPEC Plus members. As you can hear, the markets are closing early today because of the day after Thanksgiving. Vincent Chagnot, General Insurance Asset Management Head of Research, tells Bloomberg the future looks rosy, he thinks, because of a vaccine.
So yes, I do believe that the vaccine is a game changer, and that's why, by the way, we have this quite remarkable market development over November, where the value stocks, the cyclical stocks, are catching up. They have plenty of room to the upside. You know, the MSCI Europe value is up 21% this month.
Let's check the closing numbers. The S&P 500 closed up 0.25%, up 9. The Dow closed up 0.1%, up 38. And the NASDAQ up 0.9%, up 111. The 10-year is currently up 12.30 seconds with a yield of 0.84%. West Texas Intermediate crude oil closed down 0.6%, 45.43 a barrel. COMEX gold's at down 1.1% at 17.90.50 an ounce. The dollar yen 104.04, the euro $1.19.57, and the British pound $1.33.12. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Paul Sweeney and Carol Messer on Bloomberg Radio.
All right, the market closing early, of course, on this holiday shortened trading week. This hour, we've got a couple of industries being disrupted, Paul, as we know, because of the virus. And we're talking about retail and education. We've talked also already a little bit about retail. And we want to do a little bit more because it's front and center on this Black Friday, where we are not being inundated with footage of people lining up Thanksgiving afternoon or evening to be first online when a store is open. The shopping experience, we know it has changed. And our next guest is involved in that. Let's bring in Nicole Reeder, founder and CEO of Modern Mirror, on the phone in Vancouver. Hey, Nicole, so nice to have you here with Paul and myself. So first of all, hope you're doing well. Hope you had a safe holiday.
No, thank you so much for having me on your show. I'm pleased to be here. And yes, no, the holiday was great, and it was just on my own. So thank you for asking.
Yeah, a lot of us, very small groups.
Yes.
So talk to us about Modern Mirror for those who are maybe not familiar.
Of course. Well, at Modern Mirror, we create seamless, intelligent virtual fit experiences and technologies for the luxury apparel industry, servicing not only consumers, but designers, retailers, and manufacturers. So our flagship product, our Avant-Garde Fitting System, also known as AFS, provides the ability to virtually experience how clothing looks, fits, and wears on your own personal and interactive 3D image, creating a 3D body model of an individual, including appearance.
Wait. Okay, so slow down. I think Paul and I are both like, okay. One of the difficulty things when shopping, especially I feel like, is sizing, right? And sometimes it's frustrating. And that's what you guys are doing. You're actually, what do? Do we go into a booth, we look at a mirror, and we get a 3D image of our body, and it's going to tell us how something looks? How does this work?
Absolutely. So you would go into a retail store where the system is deployed, and you would get imaged within 1.5 milliseconds. And it captures hundreds of measurements and images of your body with a 0.5 millimeter accuracy. After you step out of the 3D imaging device, then what ends up happening is, whether it's through an AR or VR platform in the retail store, or whether it's through a screen or a tablet, depending on what the brand wants to have as their bespoke experience, you then can start to try on the entire collection in a matter of minutes. And then afterwards, once you leave the store, you can also continue to try on clothing on the brand's digital platforms with our API that's been integrated into their platforms.
So, Nicole, we were just talking to a guest earlier in the day, and I was just kind of fascinated about how e-commerce has really grown to really become a big part of luxury shopping. I was always under the impression that if I'm going to spend a lot of money on a piece of clothing or a watch, I'd want to go try it on. I'd want to be, one-on-one sales help. But we're finding, even for high-end luxury clothing, that's not necessarily the case. Is that kind of the vein you're trying to tap into?
Well, that's correct. You know, with luxury brands specifically, they have really pushed into e-commerce and working with a lot of different digital platforms. So people are more open to purchasing luxury clothing and garments and accessories online. However, there is still the issue that 40 to 50%, the 40 to 50% of the items that are purchased are returned, and that's due to 76% of the time due to sizing. So sizing is still a massive issue. So even if there is shopping that's being done online for luxury brands, now we have a return problem, which then escalates with associated costs for luxury brands, as well as the environmental impact that the brands are now under scrutiny by from a sustainability perspective of it.
I love that you just said that. And that's something I haven't even thought about it. Listen, Paul knows I talked about this before. Like, I'm one of those people. I go online, I buy multiple sizes, I return it. But then there's the transportation issue, the climate issue, and that really bothers me. So something like what you are doing can really really fix a big problem in this industry. Who's using you guys? Because I unfortunately, my husband knows I shop a lot. So who's using you? Tell us about, because you guys, I think you started this back in 08. So tell me, that's, over a decade of getting a feel of how it's going. So what have you seen? Who's using you?
No, absolutely. So we've actually been doing a lot of pilot testing and beta testing with our clients in the UK. So one of the designers we've been working with is Maria Grachvogel. Another one that we've been working with is Noe Bernicelli in Peru. And we're currently, I can't disclose the other larger luxury brands. We've been piloting our system. We've been in this market for a very long time because I had a very large vision before the market was really ready for this, or technology we could get the technology to where it was, where we needed it to be, especially to meet the needs and the demands of luxury consumers and luxury brands. So with that being said, we're actually in several discussions with large luxury brands that I cannot disclose at this time just because of confidentiality purposes, but right. They are looking to be an exclusive. There are several of them wanting to be an exclusive launch partner so that we can do our big release in this upcoming summer.
What's really wild is that I think about, Paul, from a consumer basis. I mean, I could have one of these in my home.
Right.
I can work out to it, or I could actually kind of be shopping through it. I mean, is that kind of where you guys are going, Nicole, eventually?
Well, with us, it's definitely an in-store experience just because there is a hardware infrastructure component to it, and I don't think you'd want one of those in your home, depending on the size of it. However, this is meant to really to really bridge a gap between the offline experience and the online experience. So then afterwards, you can have that experience at home. But especially with luxury brands, it's very important for them to drive in foot traffic and to create these technological experiences that their digital savvy clientele, especially the Gen Z and the millennials, are looking for and are demanding. And so far, with everything that we currently see in the marketplace as well, it's not meeting the expectations and the demands, both of the consumers as well as luxury brands. So with that being said, yes, it is meant so that you can utilize it at home or really anywhere on any device, but that you also continue to have that in-store experience, especially for luxury brands, because that's a main fundamental pillar of their ecosystem.
So, Nicole, talk to me about the technology here. Who was your technology partner? Because it seems like it involves some pretty high-end technology. Tell us about kind of how you solved that problem.
No, absolutely. So with stating that, as we mentioned, with our technology partner, it's one of the most high performance, accurate 3D imaging systems that's actually used in the medical industry, and that's just one component of it. The rest of the system is actually a built-in end-to-end system that we have built that integrates into brands' inventory management systems, as well as their B2B wholesale retailing applications, as well as it takes it to the next level of 3D digitizing their products. And all of that has actually been built by us. But the actual imaging device has actually been deployed in the medical industry, and that's why it is a very high-performance, fast, accurate imaging device that we are now bringing and deploying into the retail space.
So what's your plans in terms of growth? And, are you bootstrapping? You're getting investments? How are you doing it?
I actually love that question because I've done it very differently than most.
Yeah.
My background is in the fashion industry. I've come from the industry from many different areas, everything from visual merchandising to being a pattern maker, designer, and such. However, when I was a personal shopper at the time, that's where I came up with Modern Mirror. That was many, many years ago, and I realized that there was a need. People didn't like the fitting room; they didn't like to go into it. But if they went into it, they were 7 times more likely to buy. So with that being said, I was out there pitching and saying, you know, we're fashion tech, and people thought I was absolutely insane, saying fashion technology would never merge. You don't know what you're talking about. And I said, just wait, it will. So while we couldn't get investment, what I ended up doing was I actually started a construction business on my own single-handedly while running Modern Mirror at the same time, in order, because it was the only way I could personally fund Modern Mirror and our entire team to keep this project alive, keep it going, and build a superior system. So I ran both companies simultaneously, and I have just actually ended the construction prior to the COVID outbreak. So we are now, because we're now in a position of ramping up fully. The demand is there, and we are having to meet this demand of these brands quickly. So it needs my full-time attention.
So you're one of those low achievers, Nicole. That is like phenomenal. That is so crazy. Wow.
You know, because of that and because of that drive, it did attract other outside investors, because they said, if you can do that and you're building such a superior end-to-end system for a marketplace, what else can you do?
Right.
And so that's why we did receive a bit of outside investment.
Well, stay in touch and let us know how things are going, and good luck for the holiday season, and good luck with it. Nicole Reeder, founder and CEO of Modern Mirror. Interesting technology, Paul, you know, just kind of invading our world.
It is, and I think this pandemic, as it relates to e-shopping, is just accelerating a lot of those trends.
Yeah, totally. All right, you're listening to Bloomberg Markets. Carol Masser along with Paul Sweeney, and we are Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks rose to a record in thin post-holiday volume as the investors assessed valuations with pandemic still raging in parts of Europe and in the United States. Oil has retreated amid rising tensions among OPEC Plus members. Let's look at the numbers as we do every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P 500 is up 0.25%. It closed up 8 points. Dow Jones Industrial Average is up 0.1%. It closed up 38. The NASDAQ is up 0.9%, closing up 111. The 10-year up 12.30 seconds with a yield of 0.84%. West Texas Intermediate crude's down 0.5% at 45.50 a barrel. COMEX gold's down 1.2% at 17.90 even per ounce. The dollar yen 104.05. The euro $1.1951, and the British pound $1.3301. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Thank you, Greg Jarrett. We appreciate that. Well, our next guest is a really fascinating story here. She has positioned her company as the Peloton of education by connecting teachers from around the country to schools struggling to find teachers by taking over a classroom with live stream instruction. Let's get the latest. We welcome Shaylee Baranwal, CEO of Elevate K-12. Shaylee, thanks so much for joining us here. Talk to us about your company, about the issue you're trying to address.
Sure. Thank you so much for having me on. So when we talk about the problem that we're trying to solve, keep COVID aside, it's a plaguing problem in the U.S. K-12 schools and districts, which is of the teacher shortage. Now, in the past, there was already a teacher shortage problem that existed that we were solving. According to the Learning Policy Institute, there were over 500,000 teacher vacancies or uncertified substitute teachers teaching in the classrooms. With COVID now, that problem has actually grown several times. So according to the American Federation of Teachers, 1 in 3 K-12 teachers is expected to retire early due to COVID. So if you just talk about the problem right now, the teacher shortage problem across the U.S. K-12 school districts already existed, and with COVID, it's just accelerating at a much higher rate. And that is the problem that we're solving when there isn't that grade 4 math teacher or the grade 6 science teacher or the high school cybersecurity teacher not existing in the local zip code. How can you bring that same power of amazing teaching into the classroom by live streaming it so that zip code is not a barrier to the access to high quality teaching for the students that we serve?
Shaylee, one thing I want to ask you is, you said there were already over 500,000 teaching substitutes in our system. Why is it so? That sounds like a really high number. Is it? Help me out here.
Right. So the way you have to think about this problem is it's not really that the supply of teachers overall, right? So if you look at the overall demand for teachers, as of today, there are 3.1 million K-12 teachers in the school system. The supply may be slightly higher than that, but where it breaks is the geographic arbitrage. We do a lot of work, let's say in South Georgia, Dirty County, right? Sometimes it's impossible for them to find a Spanish teacher there or a calculus teacher. But there's a high supply of teachers, of calculus teachers, maybe in San Francisco. So the problem really is of a geographic arbitrage. I am surprised that there is not more conversation about this problem as we talk about reskilling America and reskilling rural America in specifics. So the problem exists, A, because of that. The second reason the problem exists is what the children need to learn is changing. We have a lot of conversations about STEM, computer science, cybersecurity. If a school district can't find a grade 4 math teacher, Carol, go figure how are they ever going to find a computer science teacher? So the problem really existed. People were talking about it, but I think COVID has just brought this problem center and completely upfront on this is a problem plaguing mostly the low-income neighborhoods in the country.
Well, and I think about, Paul, like, you probably thought about it with your kids. I know my parents did. They thought about when they bought a house, where we were going to grow up and what kind of education. That was a big thing. And we know it's just not equal, right, Paul, you know, around the country.
Absolutely. And Shaylee, I'm just wondering what the you know, this country has been dealing with really for the last 8 months as it relates to education, much more virtual education. What are your thoughts on the viability, the quality of that virtual experience vis-a-vis the in-person experience, since you've had so much experience with it?
Thank you so much for asking that question. I think it's a very important question to be asked. You'll see a lot of articles now talking about virtual education is not working, online learning is not working. I don't think virtual education or online learning is not working. What is really not working is the way it is being done. Over the last several years, we as a company have honed in on the specifics of what makes real life teaching impactful: engagement, pedagogy, the way you teach, how is the teacher being evaluated, what are you doing in a live synchronous environment. If you think about virtual teaching now and what you see with your children, what they've basically done is taken a platform like Zoom or Google Meet that was built for business and bandaged it and said, hey, K-12 schools and districts, let's use it. And that's the reason it's not working, because it wasn't built for a child. It wasn't built for engagement. The teachers didn't go through the right amount of training. The teachers are not going through the right amount of quality audits because everybody's just scrambling to fill, let's get something out to the kids. The instruction loss that is going to happen specifically in the low-income neighborhoods, because your children, Paul and Carol, still, you have Wi-Fi at home, you have laptops, you have electricity. When COVID hit, the transition was easy. We work with some school districts. When COVID hit, the only thing that the superintendent would say is, we got to first make sure that the meals are delivered to the kids. Some of these kids don't have electricity at home. Some of them don't have Wi-Fi. So there were different issues there. My viewpoint is, virtual learning and online learning works if it's done well. And the three pillars that make it highly effective is great technology built for K-12,
right?
Absolutely amazing rockstar teachers and great content.
Well, Shaylee, we got to do a little bit of news, but we'll come back and continue that conversation, because I'd love to drill down more specifically about what that great technology is, what that great content is that really makes virtual learning a plus for anyone who's learning that way. We're going to come back with Shaylee Baranwal. She is founder and CEO of Elevate K-12, joining us from Chicago. I think this is a big issue, Paul, about
yes, it is.
Right? And you think about what we could do in terms of rural areas, in terms of improving the educations out there.
Yeah, and I think it's a lot of districts are realizing that they are not, in fact, equipped. They do not have the skills. They do not have the technology. So, big issue.
All right, you're listening to Bloomberg Markets. Carol Masser, Paul Sweeney. You're listening to Bloomberg Radio.
This is Bloomberg Markets with Paul Sweeney and Carol Masser on Bloomberg Radio.
Yes, indeed. Bloomberg Markets on this Black Friday, day after Thanksgiving. Carol Masser along with Paul Sweeney. And we're going to get back to the CEO and founder of Elevate K-12. This, to me, Paul, is a really thoughtful conversation about how we can really improve virtual learning that really benefits a lot of students who are not getting the education they need.
Yeah, and it's becoming more to the fore here, Carol, with so much more remote virtual learning. It's really exposing some of the weaknesses.
All right, we're going to get more with her in just a moment. Let's get back, though, to your top business stories. Another check on that trading day. Hey, Greg Jarrett.
Hey, Carol, the few traders who clocked in this morning were evidently optimistic. Stocks gained at the close as hopes for a peaceful transition to the Biden administration offset concerns about soaring COVID-19 cases. The S&P 500 closed at a record high, and there are plenty of leftovers in the refrigerator for turkey sandwiches. Joel Feldman, Senior Managing Director and Assistant Director of Research at Telsey Advisory Group, tells Bloomberg this holiday season is all about buying online and having it delivered.
Yeah, I think people are still focused on the main areas of fitness, home office, and trying to find some joy and some things to make their living environment a little more fun and better experience.
Let's check the closing numbers. The S&P closed up 0.25%, up 9. The Dow closed up 0.1%, up 38. And the NASDAQ closed up 0.9%, up 111. The 10-year up 11/30 seconds with a yield of 0.84%. West Texas Intermediate crude down 0.2% at 45.60 a barrel. COMEX gold down 1.1% at 17.9020 an ounce. The dollar yen 104.06. The euro $1.1953, and the British pound $1.3303. That's a Bloomberg Business Flash. I'm Greg Jarrett. Now, our special edition of Bloomberg Markets continues with Carol Masser and Paul Sweeney.
Great, Jared. Thank you so much. We appreciate that. You know, Carol, I'm fortunate to live in a town that has a very good school system. But this summer, as school is just about to open, I saw for the first time signs in front of the schools recruiting substitute teachers. I guess the district was really anticipating with the COVID that there would be a greater need for substitute teachers. So if it's happening in strong school districts, you got to really wonder kind of where we are in some of the others. And fortunate to continue our discussion with Elevate K-12 CEO Shaylee Baranwal. Shaylee, again, just highlighted to me this issue of teachers. And give us a sense, are you finding that there is a growing shortage of teachers, or maybe just that arbitrage that you were talking about earlier, that's really a regional thing?
So I would answer that question in two phases. Number one, and the first problem, is the geographic arbitrage, right? If I look at the supply of teachers right now. But however, when we think about building a company, when we think about reforming a complete industry, you have to think about what this is going to do long term. And I do believe that as the percentage of people in general taking teaching certifications or wanting to be teachers reduces, this problem is going to further increase. And rather than just impacting the low-income neighborhoods, very soon may actually impact the high-income neighborhoods. So what we need to do as a society, what we need to do as a company is not just think about the problems that we are solving right now, but also think about what are the strategies and measures that need to be taken now to continue to improve the supply of teachers, like to make teaching a fun profession again, where millennials and want to be teachers and they're not worried about that being a teacher, they may not get paid a lot, or where do they want to live? I think one thing that COVID has done is, you know what, people can live anywhere they want. And with our live streaming instruction, teachers can teach straight into a classroom where the kids are in one physical location from anywhere they want. So I look at it in two phases, and that's how I see the problem evolving.
So don't you think I also think there's something wrong with us as a society, Shaylee, that I don't think there is a lot of respect for teachers. We certainly don't pay them often enough. And we also ask teachers to often buy their own supplies, contribute. There's something wrong. I didn't grow up where my parents had to buy, we bought the things I basically needed, but the school supplied a lot. And something's happened in our world, despite the amount of money that we haven't spent on taxes and it goes into education. We've really kind of gotten messed up. So how do we pay teachers more so that people want to be a teacher and come into the occupation? How do we make sure schools are funded in the right way?
So we do surveys of our teachers, right? We have a network of over 1,000 teachers in the U.S. They're located everywhere. They teach online. They teach live. And when we do our surveys, Carol, and we ask them, why did you leave the school district to work with us? What caused it? And the number one reason was because they were so done with a lot of bureaucracies and politics that happens within a school district, where they went into teaching for the joy of teaching. So frankly, it's not so much the money, it's actually the rest of the systems around it that plugs the teachers out of the school system. Definitely paying them well, making teaching a high-paid job is definitely a plus. And I'm hoping that with some of the laws changing, with some of the policies coming in, we see more and more of that. Teachers want flexibility. Like a lot of our teachers are from North Dakota. They're from Oklahoma, where they live in small towns where the cost of living is low, but they're teaching in a big town in, let's say, North Carolina and into a classroom. So I think that's what is causing them to leave the profession. And if you look at the root cause analysis of that and start targeting each one of those, you will see more and more teachers come back into the system. Like we've currently partners with companies like Sylvan Learning, where we are code sharing our teachers. We're partnering with University of Phoenix, talking to these universities on how you can make your teaching curriculum more impactful, that more millennials and the younger generation want to get into this profession and teach the way they want to, maybe from a beach. And how do you make it flexible for them?
Okay, I'm in. You sold me. But what's interesting, I have a cousin, I mean, she's retired now and probably would have kept teaching a few more years. But you mentioned bureaucracy. Talk to me about situations where schools didn't back up teachers against parents, and it became where teachers were, kind of having to reprimand kids, or it just got really difficult. And I do wonder, that dynamic, what you're hearing about that as well.
Yeah, I would say that probably not every school district goes through that. We have the fortune of working with some amazing school districts where their leaders and superintendents care a lot about their staff, because again, it's like any other organization, right? You care for your people, you give them the right tools, and the entire organization flourishes. So specifics, what I have heard about is, number one is the time commitment required, right? Like as a teacher, you may think that 8 a.m. to 3 p.m. is where your life ends. No, your life kind of continues beyond that. So the number of hours of work that they have to do beyond the 8 to 3 is what pushes a lot of teachers from a regular brick and mortar system to working with us online. The second is the flexibility of time. More than 60% of the K-12 teaching population is women. More than 83% of our teaching population is women, right? So you see the difference there. And they are between 32 to 48. They're a mother with a teaching certification. So they need that flexibility that I can work and I can also, be at home when needed. So that flexibility that the gig economy has offered to a lot of other industries, it's high time that it comes to K-12 now, and that's what we're trying to change.
Shaylee, just quickly, most school districts, I would say, around the country are really struggling with virtual learning. What mistakes do you think they're making? What advice would you give them to try to improve their virtual learning?
I think the only advice that I would give them, actually not the first one, is believe in synchronous teaching. What the difference between synchronous and asynchronous learning and teaching. Asynchronous, so a lot of remote teaching that's happening not with Elevate K-12 but without Elevate K-12 is a teacher would come online, teach for maybe 10, 15 minutes, and then that's synchronous teaching, and then give asynchronous work to the kids to do on their own, watch a video, self-paced learning. Again, it goes back to the have and the have-nots, right? Like your children would be proactive, would want to do asynchronous learning, maybe or maybe not, I'm not sure. But a lot of the students who we serve, there isn't a culture of success. They don't have those examples. So what is really not working is the lack of synchronous live teaching into remote learning. Online learning is not live learning. And I think the industry and the country needs to start understanding the difference between the two.
That's a really good, important distinction, especially as we move